What up, party people? Let's do this. Happy Wednesday. All right, let's do it. Some news right off the bat here. I'm just about done with that new GameStop video that's taking me mad long. I like filmed some of that footage today. Hopefully I might be able to finish it tonight. I gotta edit it and shit, but hopefully it's up tomorrow. Maybe we'll see. Sometimes once I get right to the finish line, I find some stuff I need to change. So anyway, keep an eye out for that, and then I can start working on some other stuff. But okay, market. What happened? Say Wednesday. What happened yesterday? I'm not even sure what happened yesterday. I forget. I have a little idea as to what happened today. I checked in a little bit. I saw things were down a little bit, but nothing too much. Look at it. I mean, if you don't, unless you see color, as we always say, I don't see any color. Brazil down a little bit. Whatever. What's that chart look like? Not great. Not great, but look at the RSI heading south below 50. All right, something to keep an eye on. Could be what's Russia doing? Out of curiosity. I hadn't been checking out the emerging market. China looks okay. Wow, jeez. Took out those highs already too. What? Let me just check Russia. That'd be one I'm curious about. Brazil, Russia, the BRIC countries. Okay, so it didn't get to its new highs yet, but that still looks good. Maybe something unique about. Was there some news out in Brazil? They got a lot of political stuff that sometimes hits the wire, and you will sell off on that. Thailand, not much. There's nothing to dig into here. This is a mostly nothing day from what it looks like so far. Also, can you see me okay? I had to. All right, that looks okay. Okay, what do we got here? Commodities. Okay, so I did see that some of the commodities sold off a little bit today, except for natural gas. That was holding up good. But now let me just check. Well, oil's doing nothing. We don't even need to check that damn chart. Wait, gold's still above 2,000? Is that not up to date? Looks like it might be a little bit out of date. Is it out of date one day? Maybe. Okay. Yeah, so down a little bit, but still noise, right? It doesn't matter. I'd like to. So I remember if you mentioned, I checked out these. I made a couple of trades, which I'll talk about in just a sec. But I had thought about adding to silver, and I didn't do it yesterday. And then today I saw stuff was pulling back a little bit. What'd silver do today too? I saw everything pulling back, but it's just not that big of a move. It's just all right there. So I'll keep my eye on it. I'd like something more, but I didn't even dabble. I'm comfortable with the current, even at 5%, 6% or whatever it is. I remember I bought some IAG a little bit. So right now I'm just waiting. Either keep going up or come back down. Maybe I'll add, but I'm not doing anything right here. Just watching from the sidelines. And then copper still holding up 290. Did it ever break 3, by the way? Oh, it did. Is this a day out? What's this, August 19th? Oh, it's above 3 today. Oh, this looks like it's a little bit out of date then, huh? What do you think? I don't know. That's fine. Wow, copper breaking above 3. Whew. Okay. It's kind of is it the bellwether that people talk about? I don't know. Not as much because we're more of a services-based economy. But you would think it's those base metals, you know what I mean? Do they kind of lead the industrial world a bit? Wow, that's a big move up. Oh, what was the news on copper today? Let's check. That's a big move, huh? Oh, so copper was up today too. I mentioned natural gas. I missed copper. Tops $3 per pound. See, that was in the news today. Yeah, it sticks out to me too. More than 2 years. City lifts price outlook as LME stockpiles. Okay, so inventory stockpiles. All right. Price will drive the stockpiles and vice versa, and blah blah blah. Oh, Kirkland's was up again today. I just see that right here. Hey, RFP crushing them. We'll get to individual stocks here. Tier high is Rio Tinto delayed restarting a smelter, more actively traded, and not much. Okay. Still a big move. Cool. That's not bearish, really. I think. Okay, and then shipping was up too, or the company Maersk was up. But other than that, not much happened. We see gold miners down today too. This is gonna roughly mimic. Yeah, it looks the same as the gold chart, right? There's nothing else here. Maybe a bit more volatile, I guess. But all right. And then silver miners. I forget that this is an ETF. SIL. It can't be that big of a market cap. Out of curiosity, what is the market cap for this? 655 million. Yeah, that's not that big for ETFs, right? Just curious. Erroneous on all accounts. Okay. All right, not much else. I mean, I don't know what happened yesterday, but that's fine. I figure if something, we'll come across it eventually. You know what I mean? It's okay that I miss a day. I mean, this happens. This is how I function, really. For the sake of the stream, maybe it changes, but me personally, I'm not checking stuff every day. How can you? And then stuff will move, and then I'll check it. I'll say, oh, this is what it's been doing the past couple weeks. I just wait for it to move. I guess that's a benefit of being a relatively longer term value investor. You know what I mean? Okay. Okay, in the risk column, we see gold. Tech was up 7% today. Well, copper, because copper was up big, and Alcoa is going to be up too for similar reasons. Yeah, it looks great, huh? Tech, great. Still only a double, though. You remember what I didn't add too much because I didn't think there was much upside, but still a really, below $10 is a great time to buy that company. It really is. A relatively lower risk play, in my opinion. I know it's commodities and stuff, but still. Alcoa, that's just crushing it. That's one of the top positions. Oh, it's right here. Look at this. It's, what position is that? No, it's top 20. Now it's top 20. I should have went a little bit heavier, but the thing was, I thought I was going to be able to, might be able to average into Alcoa. It was one of those big companies. I thought it might bump along, but it bounced back so strong. I probably trimmed it a little bit, but not much. All right, and then Freeport. See, that was the one we just checked. FCX. Sabanye's pulling back. That's going to happen with gold and silver pulling back. What's in palladium? What did palladium do today? Just 2240, roughly. Rider. Not much. What's Bitcoin doing? Yeah, is that up to date? 12,000? Why do I think that this isn't up to date? Maybe I need a refresh. I'll do that in just a sec. So it broke below 12, huh? But noise. There's nothing going on there. Just keep an eye on it. Still looks decidedly bullish, but we'll see what happens in GBTC. Oh, this is a riot, huh? Yeah, all right, down day, whatever. See what happens. Oh, what's Tesla? See, these are all like grouped. I categorize them all the same. I group them all the same in my mind. Tesla holding up there. Oh yeah, Tesla was an all-time high yesterday. Oh, cheers Elon, and cheers Tesla. Holy hell, huh? That is something. I still think it's coming for that big round number 2,000 for no other reason except it's a big round number. That's it. You know what I mean? And prevailing sentiment and all that stuff, right? But I just mean price point. I think it's coming for 2. No position. Just based on charts and sentiment. Oh, this is a riot. What's the market cap? This might be my favorite stock that I have no position in. There's so many people tracking it. Oh, it's a riot. 350 billion. Officially 350 billion. What a hoot. Oh, this is a riot. Wow. That's something to behold. Damn, look at that thing, huh? Really bullish. How high can it go? I don't even know. It doesn't feel like it's over yet. That's all. Those are my only takes. I feel like it's coming for 2, and it doesn't feel like it's over yet. I think I said this before. For a lot of these more trendier stocks, and I mean even like Bitcoin, like these trendier plays, like if we were gonna rotate out of them, and sentiment was gonna go kaput, and that people were gonna be done with them, they had their chance in March and April this year. That was it. That was a chance for everyone to be like, you know what, I'm done with this stuff. Get me into more maybe traditionally, more like traditional like value investments and stuff. Away from the growthier type things that trade at high multiples. Like that was a great opportunity for people to be like, I'm done with it. And it didn't happen. And you could tell pretty quickly. Tesla's a special case, right? Because Tesla just retested the lows. Like it retested the low. That was bullish. Tesla pulling back and only hitting its past resistance, now support, was bullish. And you knew it right out of the gate. You knew it as early as April. And I mean, I don't know about Bitcoin. Now I'm just curious. And when it didn't happen, I probably personally got really bullish on all these things. It's been a critique of mine, right? I feel like I've said that in so many videos and streams now. It's been a critique of my own that I wish I had gone even heavier. But see, look at this. Was this the same thing for Bitcoin? This is Bitcoin, right? Yeah, 4,000. They all like held up, and these are just a couple of sections. But if you pick any of those trendier, I mean, would you group NVIDIA with this too? They held up so damn well. What do you do with that? There's other. Well, I could just check the risks. Galactic. I mean, I guess there's more. Oh, I do have Nvidia. Oh, Netflix. What Netflix do? Now I'm just curious. You know what I mean? Like this is how I try to learn myself. Is I'll be like, oh, what the hell happened there? Yeah, never even pulled back. They barely pulled back. I didn't realize how. Actually, I didn't realize how little they didn't even. They barely pulled back. See what I mean? Bullish. Anyway, the time will come. The time will come where this rotation out of these types of stocks will happen. It's inevitable. This. I don't want to. I mean, I don't want to say it always happens, but it so tends to happen. You can kind of bet on these types of rotations. It's just human nature. It would truly be a shock if it didn't happen eventually. I'm not saying it happens tomorrow or anything like that, but this is just usually how investors function. And some people are saying this has gone on longer than they usually do, which may be the case, but so it could always change. Absolutely could always change. I try to avoid absolutes for that reason. And I try to be flexible for that reason. That this is why, I mean, back in the day when I was a younger value investor, I'd like kind of scoff at these things, right? And maybe I'm affected because they've been going up for so long. It's totally possible, right? Not lost on me. But I don't know. I can kind of get the case, and I think, I don't know. Anyway, no positions in any of these stocks. This is just for fun. All right, so 7:13. Okay, that was a good time. That was the dashboard. Not much going on today. Maybe some pullbacks, just some stuff to keep an eye on. All right, let's check the portfolio. What was let's see, RFP? Was there news today? Damn, did I make a note to add to RFP? Because I didn't do it. Damn. When did I do it? Let me see. No, I definitely did it. Was it the first week? No? Really? I have it in the, that surprises me. I could have sworn that I did. Oh, okay. Well, maybe that's the thing. Maybe I should have explicitly written that, huh? Okay. And it was this. No, this has been helpful for me, by the way, because it's kind of a lot of work for me. If you've seen the other videos, I don't like scrolling and pulling shit up, but like having to add something to the buy list in the spreadsheet's a lot of work. Just tossing up this notes has been pretty quick, and then the next day I just pull this up and look at it. We only take a couple of notes. It's been sick, and I don't always act on everything here, but it's just a quick reminder for me. So I didn't even add RFP. Okay, in my mind I was always going to add because I was going to add about 25% to the position. I was kind of waiting for it to pick up. And I think I did mention this on the stream. It pulled back below 3 one day. No, I think it was last week, this day. And I saw it in the morning, and it came right back up. And I thought, all right, no big deal. Because it was looking like a good support. I know it's silly, but I mean, it's such a big position because it's fundamentals, right? Hopefully that's clear. But I watched these charts for adding and trimming and stuff, and I saw it go below 3, and I thought that was a good opportunity. And I thought that day, I mentioned it to a friend. And came right back up, and I thought, all right, I got a little bit of time, and then boom, 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 boom. See what I mean? So these things can happen quick, and I still view it as like even from here, a 2-bagger, 3-bagger, even potentially a 4-bagger. So it's kind of silly that even a 25% move, I'd be, oh, it's even bigger than that though. It's a 50% move. Oh, oh, let me fix the opacity there. I see that. Hold on, let me see if I can fix the opacity there. My bad. I just had to fix this because when I was recording the videos for GameStop, I had to mess up my green screen. I had to flip things around. Okay, sorry about that. 50% move. Damn. See what I mean? It happened so quick. I feel like it was this last Wednesday? Shit. Yeah, it was Wednesday. It was a week ago. Damn. Anyway, maybe it pulls back. I'm not pulling the trigger now. Now it's getting right back to this. Oh, this was a little bit of support here too. We're always testing this stuff, right? I wouldn't say it's high conviction, but I'm always testing. It's just tests, and I saw that where it was. Oh, not that strong, right? It's only a couple of weeks, not that big, but it still caught my attention. This is why standing buy orders can help. Right now, I can't do it. There's just too many damn positions. But in theory, that's what I'd be doing. I'd be like, if I add like, hey, let's buy this here. What I would do is I'd just add a standing buy order, just put it out there, whatever my limit is, and it gets triggered when it gets triggered. You can't be thinking about this stuff. Right now I have to. It's the nature of my current situation, but that's what you'd really do. I could even do it during the stream, like toss it in the order and just have it sit there. And then it gets executed, no thinking. That's the way to do it. That's why it's good with teams and stuff like that. It's just tougher as an individual investor, especially with so many positions. So at this point, I'm going to wait for a pullback. And it's fine because it's the second biggest position in the portfolio now. Check it. Number 2. What do you want me to do? Like, I'm upset. It's up 50% in a week, and I'm upset, right? Like, it's so silly. This is the life of a value investor, right? And it's almost 3% of the portfolio. So that's sick, right? It's awesome. It's just that day I was like, I got to add. So, oh, well, that's cool. I still think it could keep running. What surprised me today, was there any damn news? That was what surprised me. Did I miss anything? I didn't see anything. And it's a really quiet company because... Oh, is lumber up again? Oh, I should get in the habit of checking that, huh? Because that one's been berserk. Sorry, let me scroll back over. What the hell's lumber? Is it still making like all-time highs? It's been cranking. I probably have it in the. I probably have it in this risk column, don't I? I should. I do. I think I mentioned I do. Wow, look at that, huh? I have exposure to lumber, if you want to say it, by way of like residential real estate type plays, and RFP. I mean, it's tangentially related, but wow, this is crushing it, huh? Super overbought, super bullish. It's the thing, you expect quick pullbacks and stuff. Sometimes you don't get it. That much I know. Holy hell, huh? Damn. Okay, what was the news? Out of curiosity, was there a news there? Is that why? Because RFP was all the lumber. I mean, this kind of, you see how big lumber was up. I guess it's safe to say. Wow. Damn. Oh, they all set a whole bunch of the lumber Canadian producers all-time highs, crushing it. An upgrade. Okay, so it got an upgrade today. Wow, 22% on an upgrade? That's something, huh? On RFP too. What's that mean? Kind of a quiet stock. There's not always news, and it's because some of the bigger investors have like control of the company, and they're like kind of quiet. They were too quiet for me because I've said this a couple of times, but like I wanted to keep adding to the position. And even when it was still in the ones and the twos, like I wanted to go super heavy. I said to a friend, literally this day, it was a phone call on April 1st. It was trading at $1, and I said this is going to be one of those 10 baggers coming out of one of my 10 baggers because I tracked it all the way down. It was super super high conviction play, and there were plenty of other 10 baggers too, right? Like Camping World was a 10 bagger for me. I didn't think that was going to be a 10 bagger. Whereas RFP, I'm like, this is 10 bagger potential right here that day, April 1st, and I wanted to keep buying more on the way up, and I did buy some. But I was just so quiet. They weren't saying anything. They weren't doing anything. The insiders weren't taking action. The value investors weren't saying anything. They had announced back in like January or February they were going to do a very small like buyback program, but he didn't know if they were buying back in the open market. And it was like really kind of weird, and I just wanted a little bit more. But still, you could see my conviction, right? I mean, as clear to me as it's clear to you, right? That it's the second largest position in the portfolio, and I haven't even been trimming stuff. But I think it could keep running. It's leveraged, but a lot of it is like pension liabilities too, and just when when lumber's crushing it, and in the assets that it has is in favor, it's really in demand. It generates a shit ton of free cash flow, like a shit ton of free cash flow. Let's check out the historical fundamental. I don't even need to pull it up because I looked at it so many times, but keep it rocking. And just to make sure, it was just an upgrade though. That's kind of weird. Would they upgrade it to or anything? Just to outperform? Nope. And I don't even heard who is. Oh, I mean it's RBC. No, who was it that upgraded them? Yeah, RBC Capital. I don't know. Well, it's just a big move. I guess lumber. It's just lumber driving it. Cool. 4 and 4. Is it just issuing stuff maybe? Look at that. There's even a small sale there from the SVP. All right. Okay, let's keep going here. NGD down, that's because gold's down. I'm still keeping it there, so I didn't add anything. I also didn't trim anything. Just watching it for now. CNR, just kind of bumbling around, taking its time after that big jump last week. It's hit right at a route resistance, which a lot of things are with the market and stuff. So this is something I did see happen. So first of all, look at Antero. Okay, now it's the seventh largest position in the portfolio. So this is one action I did do. So huge sell-off yesterday. In fact, I didn't even fully read that whole press release yet. But they were doing a offering of a convertible senior note, which generally I don't love. It just depends on the circumstances and stuff. And so it sold off like, what was it, 15, 20%, something impressive. And I definitely mentioned in one of these, I'm not going to go hunt it down, that to add to AR. And I didn't. I was waiting. I had added maybe a little bit. I added maybe last week, but not much. Like it still wasn't a top 20 position or anything like that, or even top 30, I don't think, because I still have that RRC exposure. So I was kind of waiting, just because I was waiting for a pullback, really. And then I got it yesterday. So this was the news. It was a convertible. 18th, yeah. A private placement to it's a private placement too, not floating it to the public. 4% convertible senior notes due 2026. So a little bit of a time frame there. A little bit of a time cushion, I'd rather. And then I didn't look through the full details of the convertibles. Wait, there you go. The initial rate, the conversion price of approximately 434. Okay, approximately 20% over the last reported sale price. Wait, is this a second press release? Oh, it is. It is a second. Oh, you know what? I saw this first press release. I was going to say, I didn't think it was priced. I didn't think it was priced that first time I saw it. Also, they're using the price after the sell-off. Yeah, it's a 20% over the last reported sale price, which was after you made the initial announcement. The hell? Kind of a weird thing. Company stock exceeds. So, I mean, it's just a convertible note. So I wish they had. Do they have any commentary on it? That's what I wanted to see. Repurchase their notes. Okay, so there's some nuances to the notes and stuff, but at the end of the day, they issued convertible notes. You know what I mean? That's what the market sees. That's what I see too. You hope it's opportunistic, but you're like, why now? I mean, natural gas has been cranking, and natural gas stocks have been cranking, and maybe my question is, are they a little bit bearish on natural gas prices? Did they box themselves into a corner? I'm not as dialed in with Antero as I am with some other companies, so I'm not totally sure. But the way I see it is what I've said about natural gas many times is that this could be a multi-year trend, multi-year turnaround for natural gas stocks. And Antero management seems like they're aligned with shareholders. They've even been buying back shares. I double-checked that. They bought back 20% of shares or something. Now I got to pull it up. Plus, they have a pretty solid... oh, I got it up. Nice. Don't they have a pretty solid stake in Antero? I want to say is it not Paul Rady? He owns 6%. Is that it? Okay. Let me just check. This is what I do for confirmation when I want to see management. I'll pull up the proxy, and then you got to do beneficial ownership. Try to get right to it. Boom. Sailing Stone 8.4%, Paul Rady 5.6. Yeah, and they own 10% together, which isn't a ton. It isn't a ton, but it's something. And that guy by himself owns 5%. And then I think let me just check that share repurchases too. It's GameStop. GameStop all over the place. Now I've had it up because I was just checking it for the video. Oh, it's taking a while. Close out of some stuff. A little bit slow today, huh? Do I have... I have... I think because I have Final Cut open. Damn. I probably should have closed that. Yeah, check the share repurchase. They went from 310 to 268. What's that decline? 13%. Not a ton amount, but it was kind of surprising too because they're so leveraged. It's like, what the hell are you doing there? It's still a billion-dollar company. But anyway... A big part of my thesis now, and I'm not afraid to say this, well, two things. The first is the fundamental case for natural gas is that supply is being curtailed, and I do expect natural gas prices to rise over the next 6 to 12 months too, going into the winter and everything. I think it could break. Are we already at? What's that? What's the natural gas futures curve? Can I pull it up here? Contracts. Yeah, you can see it. So, okay, we're already above 3 for the futures contracts, but I could see the spot price getting above 3, and that's all super bullish, and it's kind of getting priced in by way of some of these natural gas stocks. Anyway, so I remain bullish for fundamental reasons, and then if the economy gets back cranking along, this is the market trying to get ahead of itself, trying to crank back, and just natural gas demand could rise, and that's the thinking. But then I've also mentioned probably numerous times now, I'm losing track, how the sector's gotten his ass kicked for five years. And we can see, I'll just pull up RRC as just an example. And these things, I mean, as this is happening, supply's getting cut, and then eventually it turns around, and then you get a multi-year bull market in it, and you get this final capitulation, which of course a lot of things, this final capitulation was for a lot of reasons, right? I mean, the pandemic and everything. But sometimes this is like the catalyst to turn things around, and so this is super bullish, and I'm thinking like, I'm not saying this is definitely going to happen, but I feel like it could. And look at, we're almost getting overbought. Oh, this is RRC, almost overbought on the weekly, huh? And yeah, they like these cyclical types of names. It's not uncommon, so it could be happening right here, and so I'm operating under that assumption. But I'm willing to say that I'm wrong. That's perfectly fine. But so far as I still think that's the case, just like I thought it was gold. This is the thing. I've seen it happen. I've seen it happen like a handful of times now. I think I mentioned this about gold. Back in let me use a 20-year chart for this. But it seemed to bottom right around here, and then on every pullback. This is what I'm getting at. I mean, we're still very early if this is a multi-year term. But every pullback, I was saying I'm operating under the assumption that this is the turnaround, because it seemed like it had been, what was this, 5 years? 1, 2, 3, 4, something like 5, 6 years. And it's like, okay. And I'm also looking at the prices of the individual stocks, just like I'm doing with natural gas. You see these natural gas players trading at fractions of book value. Now, book value is in question, right? Nevertheless, the point is that when the stocks themselves are just trading at super discount prices, and you've seen capitulation in the prices and so forth, and for fundamental reasons, it looks like things could be turning around, and then the charts start turning around. Then when you get these pullbacks, I kind of operate in the assumption like this is just a pullback. We're not taking out the lows or anything like that. And it's and same thing for here. You know what I mean? It didn't even retest those lows here. And so it happened with gold. I feel like it's happened with commodities generally too. Although a whole bunch of oil names took out their 2016 lows. I mean, oil prices, that's a kind of a little bit of a more special case given all that's going on with that commodity. But that's anyway. So I'm working on that assumption. So Antero sells off, right, for a very largely a business specific reason, issuing convertible notes, and then it raises the questions of liquidity. I mean, of liquidity risk and solvency risk, and then it's back in the headlines because it's a legitimate risk with Antero. Let me turn this off. And then let's pop up the bonds. Let's just check this out. I feel like we just did this, and they were still trading, not in the gutter, but definitely not super compelling. Oh, this is better than I remembered. Did they get up? Did they rise? I thought they were more in the 60s. What was I looking at? Maybe I was looking at a different name. It does look like they're up a bit. Look at this. They're up. Right? And because it's a little bit of a safer, I mean, they just raised some notes, so you would expect these to hold up well. It increases the chances these bondholders are going to get paid, but still discounted, right? I mean, trading at a 30% discount to par. But was that the 2023s? What's the 2022s? What have those been doing? Out of curiosity. Wow. Yeah, hold it up okay. So 84. So a discount, but like my type of discount, right? Other people won't like this. I think 70. That ain't bad at all. Oh, you know what we were looking at too? We were checking to see how low it got back in the day too. But these bond prices are holding up. These bond prices are holding up really nice, actually. I forgot this. I feel like I was focused too much on where they traded at in March and April. Okay. Interesting. So anyway, what I was one thing I was doing is that, I mean, so air pulled back business specific reasons. Then I'm like, well, okay, let's just keep an eye on natural gas, and let's keep an eye on RRC, and we need more time for this. But like natural gas is crushing it this week as well. Now it's up over 240. This is super bullish, right? But it's volatile. It could pull back and crash down next week or something like that. But this is bullish and really bullish, huh? I mean, we'll see what happens. I never got oversold on a weekly basis. That's impressive. Okay, but so that's been up. Like if that were tanking too, and then I'm like, well, what's RRC doing? What's range doing? It's like this still looks terrific. Although notice how it got overbought quite a bit on the daily back in April, but it didn't get overbought. That's bearish. Hopefully it gets more aggressively overbought. Not a big deal, but something I do look at. On the weekly, it's getting, okay, on the weekly is more bullish. Okay. It never got overbought on the weekly back in April, May, but now it's kissing it right now. Sick. Okay. Anyway, RRC still looking good. SWN, not as good. How about EQT? EQT still holding up okay. Wow, RRC. Oh, I did a good job picking RRC, did I? What's the other one? Cabot? Is it Cabot? Oh, I got it. Nice. Boy, RRC looks the best, huh? Sheesh. I didn't realize how much better it looked than the other ones. But still, they seem to be holding up okay. So anyway, so now I'm operating under the assumption that this whole trend is still intact for now, and that huge sell-off, while somewhat legitimate, might have been overdone, especially if indeed the backdrop is natural gas producers are coming back in favor, and yeah, and I'm not totally sold. I think that's the case, but I'm not totally sold on it. Like I sure wish there were more insiders buying. Remember that director bought a shit ton of RRC right in early March and stuff, and so even AR is not buying that much. They're not buying anything on the open market of stock. So I don't know, just something. Yeah, we'll see. And then in my mind, I didn't set a stop loss, although I should. But in my mind, I got like some stop losses in my mind as to when I'd start reducing. But for now, I'm just watching. And so anyway, I pulled. That's a long, a little bit of a long story. Anyway, so I pulled the trigger on Antero, and now it's the 7th largest position. So I trimmed OVV, and what I should have done was trim RRC. I almost did. I hid the order up. And I'm like, all right, let me just hold, because what I should be doing is replacing some of RRC with AR. Now I just added a whole bunch of natural gas exposure, but I thought maybe AR got a little bit overdone on that sell-off based on that news. When this improves their financial situation, right? But it could be dilutive for shareholders, right? That's the risk. So I probably will trim RRC just because of that, but yeah, we'll see. It just looks so damn bullish. You know what I mean? That was the thing. I pulled up stuff. I'm like, damn, this still looks really good. But really, that's what you're supposed to do. I don't know if I want this much natural gas exposure. We'll see. But and then SD, I think I might want to add some more SD based on that. I think we talk about that on Monday, I think. But I'm just waiting on that. I'm just waiting. So that would be quite a bit of natural gas exposure. But it's holding up. I bought some more SD outside of the Roaring Kitty portfolio, just because it looks really interesting. So yeah, I'm keeping my eye on that. That's one too that kind of anyway, but I could add that to the Roaring Kitty portfolio too. Add more to it. I feel like that was it for the major. Like I said, I mentioned I trimmed OVV just to raise some cash. My cash is getting low. I should have the cash allocation right up top here. You know what I mean? But I can pull this up. Cash down to 2.8%. I mean, I tend to, yeah, I don't know. That seems low. It's because I got that huge position in GameStop. I need to start going through and trimming a whole bunch of these positions. That's what I got to do. I mean, a lot of them are big winners, right? But that's the thing. Some of them still look damn cheap. So I don't really like to bet that, the market's gonna give back all the gains and stuff. Like that could happen, but I don't feel super comfortable betting on it. But I should just trim cash. That's usually what I do, is I'll trim cash just to hedge. That's my hedge. I'm not usually shorting stuff, but yeah. Okay. And what else was going today? So RFP, that's a big move up. Still only less than a $400 million market cap, huh? That's something. SBSW. Oh, UFI is taking off. It's not gonna pull back to 10, is it? Good thing. Good. We did add. I did add to it, just not huge. I think we said 10. I wish I could. I wonder if I can Command F and look at all. Really? I feel like I've definitely taken more notes on that. No? All right. Okay. Okay. Damn, that's okay. I'm okay with that. I think we talked about I could park some cash in there. I'll just wait for right now, because it's not like super. That's the thing. Like AR and SD, those could be like 5 baggers. That's kind of why I put a little bit more in them. It's that asymmetric upside. You know what I mean? This would be a safe place to park cash. I'm not saying it can't lose money. You can, but for me, this is a safer place to park cash. But I'd like it a little bit cheaper, huh? Now I'll just watch. NGS. Oh, I held on to this company. That's good. I almost. So check out this company. It's about damn time. It took forever. And I saw it on March 18th. I saw this. Oh, it was March 19th. It happened in the morning. I didn't. I didn't pull the trigger that March 19th. Damn. No, excuse me. I already had the position, but I didn't add more on that huge sell-off. But I did see it go below 3, and I'm like, oh. And then I thought maybe it'd come back, but I was adding all throughout here. But really strong balance sheet. I want to pull this up and check this out. But super small company, 120, not super small, 127. But they, I believe they do have the equipment for producing natural gas, so people rent their stuff, and it was like a super strong balance sheet too. So it's maybe people are just filtering by the phrase natural gas, and they're coming across this company. And but let me see how I didn't know, I wasn't sure about the upside, but but the balance sheet was so damn strong, and I thought I have to own it. I have to keep it in the portfolio. And even earlier this week when I was looking at potentially what happened? It'll come back. I was looking this week. I'm like, no, I better keep that natural gas equipment company in there. All right, I'll keep going. There. Okay, here it goes. Come on. Yeah, so these are small, like revenues wise, not that much, but look at all the purple and green, huh? Sick. Look, is it $18 in book value, trading at $5? And so I wanted to buy. I think the position might have been larger, and then I put it into what I thought would have some companies that I thought maybe had some more upside. But like legitimate historical earnings. It's like, this one looked really good. It still looks somewhat compelling. Maybe now it's getting people's attention. Actually, now it could be. Now it's people weren't talking about it that much. Now should I add to it? Oh wow. I kind of forgot the historical price on this one. I see the book value. Oh, might be an ad. Was this the weekly? It's only now getting above 50 on the RSI. It was so slow moving. And why is that? Is it because I really wasn't sure? I mean, even the size of the company didn't make much sense. It was not that small. No, that ain't it. Do the insiders have a ton of it? I don't remember. You know what I mean? Like, if is there a low float? Is that part of the issue? And people couldn't even No, there's not. I have no idea. For such a strong balance. It's like no one cares about it. You know what I mean? It's kind of weird to me. Now it's probably a buy. Let's make our first note of the day. That's the thing. I don't need to make notes about a lot of the stuff we just talked about. I don't need to make notes for all that because I'm starting to get back into the internalizing stuff. Like I know about RFP, and I can't be writing the same damn notes over and over again. I'll go crazy. I know about UFI and gold and silver. We got all that. This is more just some new stuff to jog my memory. I'm just going to say add to NGS. I could use a little bit more of that, I think. Look at this balance. How can I compete with this balance sheet? $18 in book value. Now the question is, what is book value comprised of? And actually, here's where these charts can kind of come in handy. It's mostly fixed assets, and as I recall, it's equipment. We'll pull it up. Mostly fixed assets. Hey, these graphics I don't use these much, but they're kind of helpful. And you can see it's mostly book value. But look how well it was historically run, right? And you could say, oh well, these were the boom years and blah blah blah. But just excellent equity growth. Tremendous. It's one of those ones that doesn't what were we looking at? We've been looking at a number of companies like that, where it's just so historically well run. You could have bought it based on this alone, trading at $5, all this purple and green. No liquidity, no debt concerns, or you'll buy it on that. That's it. A 1 minute kitty corner video, done. And then you get this whole natural gas angle, and then forget about it. So that's what I mean. This could even be a triple from here, under the right circumstances. But maybe I add. I was kind of just waiting for people to catch on. It's like it was doing nothing, and everything else was flying by. All the other positions, and I'm like, come on. You could see it doing nothing, and then I started to wonder. But this is definitely a safer way to play stuff. So I just want to see, a late 10Q? Yikes. What's that about? Also, yeah, why did it run up today? What the hell is this? All right, this is their votes for what'd they vote on? Just the board nominees. That's what was filed today. What the hell was it up for? Anything in particular? Oh, they report yesterday. Wow, they had to. Oh, so they reported yesterday. Well, that's a safe guess, right? A provider of natural gas compression equipment. There you go. So I don't even need to pull up the 10K. Demonstrated its resilience during quarter. Net income of adjusted EBITDA, 13% increase over the fourth quarter, and an increase of 5.3% when compared. So it's EBITDA was adjusted EBITDA was up year over year. Rental revenue, an increase of 11. Revenue was up 11% year over year. Company has ample liquidity, $15 million in cash. How many shares outstanding? 13. It's got $1 in cash, low debt. Forecasted capex of $8 million. Like, so simple. Don't you love these small? That's another thing. Benefit of being a smaller investor too. In the grand scheme of things, talk about those big, huge institutions. They literally can't enter a position because it's too small. But like 128 million can get involved with that, and they have like really simple balance sheets and really simple businesses relative to the behemoths, the big companies, and it's just kind of nice. Look at this, a couple of bullet points and you're done. You get the gist of it. And plus, it's kind of funny seeing the small numbers, right? Like 15 million in cash compared to everything else. It's like not that much. And do they have any comment? Okay, in spite of continued weakness, it's good to check out sometimes you just get the quote. Continued weakness in energy demand and volatile energy, largely a result of the COVID, blah, 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 solve financial our ability to rapidly to reduce our cost structure. We have been able to address our customers' requests. Revenues decline. Oh, revenues did decline. I was going to say, that's kind of weird. There's no way revenues are up, right? Revenues declined in the quarter. We were able to post sequential gains in both gross margin and EBITDA. We continue to strengthen our balance sheet. And again, it already has a really strong balance sheet, so that's kind of interesting phrasing. Delivered free cash flow during the quarter. Wow. We said this about another company too. If you're announcing, I don't even care what it is, but if you announce positive free cash flow during this quarter, props. That's impressive. Cash balance grew. Commodity prices have framed from low. Business has improved, slow and consistent, new opportunities, blah, blah, blah. All right, so there's not really much in there. Is anyone talking about it? See what I mean? Nothing. This guy writes articles on everything. No comments on this. No comments on this one. It was up. How much was it up today? What does it? It's nothing. No one talks about this, which is fine. That's not that big of a deal. But I was, just looking for I don't know, emotional support. You know what I mean? But that's the thing. When you see a balance sheet like that, though, you need it less. You don't because. Usually it's more credit risks that you're like, am I assessing these effectively? But a company like this, you're like, I'm just betting on not the demand for its products to turn around, which they typically do. But with this strong of a balance sheet, they probably could have sustained a few quarters in tangible book. So I figured even if tangible book value can, let's say they have a couple consecutive quarters of losses. I'm like, even if they have 4 quarters of losses here, you're still going to have book value of maybe like, I don't know, I was just guessing like $10 or $12 or something. I'm like, that's still a decent margin of safety. You know what I mean? And then it could always bounce back too. So maybe it's an ad. I might add to it. How big? Maybe get it to 1%. It's just such a strong balance sheet. I don't know that there's significant upside, but I can play that. Look at that. Previously, it never traded. Look, it was always traded at a multiple of tangible book. That's what stood out to me. I was like, what the hell? This is going to be a really safe triple or quadruple for people who got those lows, in my opinion. Not really safe, all relative, right? Relative to the other positions in the Ryan Kitty portfolio, I mean. I think it's going to get back to book value. Yeah, I think I had. Okay. So, interesting. What was that? Why was the 10Q delayed? What the hell's that about? Oh, delayed by a day? What's this? So it's not as alarming with a smaller company. You don't want to see it happen, but the smaller company. It's not that small a company though. $100 million. Okay, okay, my apologies. Due to an increase of positive COVID-19 cases in the Midland, Texas area, including a verified positive test among the company's professional staff, the company was forced to close tests. No problem. See what I mean? So by pulling this up, now we have no reason to be concerned. And for a second time, which remains closed. The office closure was dictated by positive testing. Okay. You know what I mean? So I'm glad we pulled this out. Although we already saw it got filed, so it's not that big a deal anyway. Sometimes you'll see this filed and you don't have a 10Q for quarters of stuff. Usually if that's happening, there's something else in the announcement there. But so it's just a couple of weeks. No big deal. I mean, with this shit's going on here, that's what I mean. No big deal. What was this one? Oh, there was their vote. Okay. Yeah, I think I'm going to add to that. And let me just see. I want to check this though. Like, it'd be probably helpful to check out the risk factors. You know what I mean? I just want to ensure. Pull up a 10K, huh? How many times have we pulled up a 10K during the stream? Not much. Is that too big? That's too big. Let's go. What's the business? Major companies, Oxy. So they're in a customer risk here too that I forgot about, 36%, but I mean, it's energy. And 28% of our revenue, Devon. See what I mean? So these are legitimate businesses too, you know what I mean? But a little bit of a risk, a little bit, but it's energy. Someone else might use their products instead. But I viewed them as not bad. Market for compression equipment and services is dependent on the condition of the oil and natural gas company, including the CapEx budgets for domestic oil and gas companies. So of course it's going to sell off because they were pulling back on CapEx. Level of activity in CapEx is generally dependent on the prevailing view of future gas and oil prices, right? No surprise there, which are influenced by numerous supply and demand factors, including availability. We get all that part. I kind of just wanted to know the breakdown of oil versus natural gas demand. Oil and natural gas price, like they're kind of talking about them in tandem. Is one more important than the other? I mean, it says natural gas compression segment, right? I mean, I've always thought it was natural gas. The compressor industry participants can achieve significant advantages through size and geographic breadth. As the number of rental compressors in our rental fleet increases, the number of sales. They're pretty. I mean, I think it's safe to say natural gas is more meaningful for this company. But okay, yeah, I think this is an ad. This is solid. Especially if you're bullish on natural gas and all, but this is what I wanted to get to. Just see, sometimes they'll say, well, the risk of one of the risks, I mean, obviously for energy, any companies related to energy, we have a good idea as to what the risks are, but they may specifically say if, right here we go, decreased oil and natural gas prices, CapEx levels, yeah, revenues drive oil and natural gas, which in turn, blah, 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 blah. Oil and natural gas, price for oil and natural gas, blah, 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 blah. So it was another play just on the energy, right? Just... a diversified lower risk play, really. Yeah, okay. So they're pretty. They keep it pretty broad. Look at this: a reduction in demand for oil. Result of our operations depend on the level of activity in the energy market, including oil development. Yeah, okay. Increased regulation. So fracking is a risk to natural gas too, by the way. Which is kind of like a political risk in a way, right? Just so that's a legitimate risk. My thinking is it could still happen, but if it were going to happen, like it's kind of surprised me that it didn't happen already, right? But could still happen. Okay. Compressor rental 6 months, right? The loss of one or more current key customers, right? That's a typical risk. Members of our management, blah, blah, blah. Not much, just usual stuff. But okay, that's an ad. It's an ad. And I don't even know if I need to wait for a pullback so much because of the strength of that balance sheet. And plus, I feel like I'm a little bit underexposed to it. I feel like it should already be 1% right now. It's okay. Maybe it pulls back tomorrow. I trimmed OVV. I mentioned that. I'll trim some other stuff too. It's time to do that again. I don't like that cash position so low. Like XCC, I'll just sell out of XCC. You know what I mean? I have some bigger oil plays that I've been trimming those. I kind of like the names in here though. Okay, just have to take a peek. CVE, I can start trimming that. Boy, that's turned out to be. I was up quite a bit, but not much. Yeah. Oh no, that is so I had calls on this as well because they had a tremendous amount of insider buying too. Canadian company, look it up. right? This was the other half of, Canadian company. What happened was, I don't even know how to pronounce it. Senevis? I don't know. Senevu? I think it's like French, right? Senevu? That's how I thought, because it's a Canadian company. I don't know if it's based in French Canadian or whatever. I don't know. But it split from Encana. This is a number of years back. And then Encana became Ovintiv, OVV. And so I've kind of I was in Encana back in the day before I knew what I was doing. And so I've tracked them both closely. And then so I was buying calls on, you know what? Was this a Burry stock too? Did he ever own that? He might have owned it last year. I've trailed it because I've followed it since Encana, but he actually might have owned this too. I don't know. I forget if that's true. Anyway, I picked up calls on this one in OVV, and it turned out to be a good winner. Those Canadian companies seem to sell off worse than some of the other ones. I thought it went from like $8 down to $1. You know what I mean? Like, that's a huge sell off, and I thought it got sold off more than the other stuff. And I figured, I have no idea, but maybe it was partly just because they're Canadian companies. And people just wanted U.S.-centric stuff. Maybe that's probably a bold claim. That could just be they were just more leveraged. I'm not really sure off the top of my head, but I don't know. I thought people were overlooking them for that reason, so I was buying them up. And I mean, CVE was a bigger position. I've been trimming it all the way up. Anyway, I could start trimming that one. All right, I don't feel like going through. I just want to see what else. Anything else moving? Oh, see, OLN coming down. See, we just gotta bide our time on this one. There is no rush. There is no rush to get in this one. Let it keep coming. See what I mean? Look at this. No rush. Just let it. It's going to come to us. It looks super bearish. I know we said that on Wednesday. I'm pretty sure we said it on Wednesday. We said, got the position. And, I mean, I had the position back here, but I had trimmed it because I think I put more in TSE or something. I think I did a good job trimming on that one, actually. I might have done it really early. But it never went up that much either, by the way. But this looks bearish. Look at this. It was up the RSI. This it never took out the all high. Never took out this high in June, and then it's just down. This looks bearish, and now it's coming against a little bit of a support here, which is kind of this is a good thing. We look at so many charts, right? This is what I want to do. Part of the stream too is be looking at more charts and stuff and have everything internalized already. I could have been doing a better job of that earlier this year before COVID all happened. And so that's one thing. Just have my finger on the pulse fundamentally, but also technically. And we know not many companies have charts that look like this. So this is extra bearish because shouldn't be taken out, assuming there's anything to technical analysis, shouldn't be taking out lows like this. You know what I mean? And I know we looked at it. That's the thing. I'm not going to look at the fundamentals right now. We just looked last week. I'll give it some time. Now let's just see what happens with the price action. And I'll pull it up again next week. I don't feel like it right now. I feel good with the position at 0.6%. I don't have super high conviction to think that $10 itself was super cheap. And this there probably wasn't even news today, was there? Could be a bold claim. Yeah, no news. People just getting out of it. That probably expecting the dividend to get cut and all that stuff. Cool. Come to Roaring Kitty. Come to Roaring Kitty. And what's TSE doing? What are some of the other chemical? Let's pull up the chemical names in particular. So they're pulling back a little bit, but still looks intact. NCC looks good. You know what I mean? That's bearish. Now you might think, oh, OLN's pulling back. Like I thought this with Antero, right? I thought, hey, natural gas still looks good, so I'll buy some Antero. But Antero was looking good right up until that announcement. You know what I mean? Like, sorry, just to do this OLN. This is looking bearish over a 3-month period. Compare it with AR, this was looking bullish, and it had just broken out, and it was taken off on last week too, and then this happened. Then it's like it still looks like it's intact. It's not like deteriorating, or it looks like the rotation was taking place. So that's bullish to me, and that's why I pulled the trigger. But I'm not doing it on OLM. This is me trying to justify to myself. It's not like I thought through. All right, I have so many positions. It's not like I'm thinking through. Wait a second, why am I not adding to OLM, but I'm adding to AR? But now, as I think, I'm trying to. This is the manifestation of my decisions. You know what I mean? But okay. Let me just close out of some stuff, just because I got some stuff open on the computer, so I hope the stream doesn't slow down. Does OLN have publicly traded? Let's check this out out of curiosity. I'm sure these would trade, richly, right? Yeah. Look. Okay. I feel like we may have. I feel like we might have looked at them. Um, because I mean, a decent company. What's the market cap? It's at least a couple billion. 6.5. Oh, only 1.5. That's not as big as I thought. It's gonna say 3. I mean, it was. I mean, a couple months ago it was 50% higher, over 2 billion. But interesting. Yeah, let's see what happens here. So I don't feel like pulling up the spreadsheet to say RK buy right now, but I'll just and I don't even need to add it to the. I don't even need to add the note. Like I got the note in my head. I'll remember that. All right, TGB. Oh man, this thing's really taken off. I bought this at 20 cents. 20 cents. I got it right there. I think I got it these days. 4-bagger. Should I have bought more? I didn't think. It went up so quick. Look at this. What am I supposed to do? No pullbacks. No leveling off. Bam, 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 bam. I was just like, all right. A more developmental type copper producer. Damn. Whatever. It could go. This could double again, by the way. I think I had. I haven't pulled up these fundamentals in a while, but I remember thinking $1.50 to $2.50. It kind of aligned with tangible book, if I recall correctly. And you had this huge sell-off. Could have bought more, but I was still diversified. This isn't so much a missed opportunity. Like I mean, it's in the damn portfolio. But even after this big run-up, it's still only. I mean, I've trimmed this, right? I hope I did. There's no way I made it that small. I don't know. It was a lot of uncertainty back then. Oh, there's we just talked about Bassett. Yeah, expect Bassett to do well. So this isn't. Let's pull this one up too, because this is another. I feel like we just talked about this on Monday. Kind of not a lower. It's not a low risk play, but it's home furnishings. If residential real estate is crushing it, and I know it's like some stores are closed like that, and because of the pandemic and everything like that, but this seems like a decent play because it's got a strong balance sheet. And maybe I should buy more of it. I think I should. I've been holding off. I've held off for similar reasons as NGS. Is that I thought, I don't know. It's hard to explain. Like it wasn't getting much traction, and not too many people were talking about it. But what's that? NGS? What's going on here? Why does it keep refreshing and stuff? Sometimes this happens midday because the tickers are refreshing because what I had checked off is changing because the daily, let's say the daily movers is moving around. Oh, it's here. My bad. Oh, good. I must have unchecked everything. I was wondering why there's so few tickers over there. I forgot. See what I mean? That's weird stuff showing other companies when it pops up like that. Bizarre. But historically, a decent. Look at so that just got debt, but that's the damn leases. But look at book value. So it had book value about $15. This is the thing. It never got that. No, it did get down to $5. It was cheap at $5. That was the thing. And part of the issue was I thought it. So I missed it well below $5. It never got that cheap. Like it was traded at 1/3 of book value, but you're seeing other shit out there trading at like 10% book value at that time. And I always thought $34. I looked at this for a while in March. I looked at it for a while because I had followed it for a long time too. I think it's a toll position as well. They used to dabble in that, and so you see the strong book value. They never had any debt, but it was well run. But it was kind of just like they were riding the residential real estate wave. But then there's a question of, okay, well, if it starts throwing off losses, even look at historical earnings. Historical earnings were peaked at $1.60. You know what I mean? So 10 times that, $16, right? Just as in your head. But it's so well run, but it's still just a brick and mortar retailer. And there's a lot of home furnishings that are crushing it. You know what I mean? But we were looking at Kirkland, right? That's why this came up. Oh, that's why that was up too. Oh, I know I just added that to missed opportunities. Don't remind me. It was somehow another missed opportunity the past week. oh, that one's painful. But I mean, see what I mean? Like comparatively. So this one's up. I don't even. What is it up? How many X? It's up 10, 11, 12X anyway. And VSEP is a double. You know what I mean? Like, so that was the right decision to not go super heavy into it for whatever. I just thought it didn't get that cheap, and it didn't get that cheap because of the balance sheet. But at the end of the day, it's still just a brick and mortar retailer. But and they have cash flow. You know what I mean? So I talk about earnings, but they had a pretty some solid free cash flow of close to $2 per share. So at $5, that's cheap, but I just didn't think it was as cheap. And now it's another way to play. I mean, consumer discretionary, demand for home furnishings, which you could now. It's got competition, right? It's got you can get home furnishings in many places. To be honest, I'm not sure how popular this brand is. This name, I haven't shopped there too much myself. I know of it, but I tell you what I like. What sticks out to me is how historically it was. It seems like it was pretty well run. It seems with not that much debt. It seems like they did a good job. I like that. That goes a long way with me. And it's cyclical. You know what I mean? So that was the thing. I thought I thought this cycle could drag on longer. That was a thing, but I don't know. I don't even know if I want to add it here. You know what I mean? NGS, that's still trading quite a bit below book, but here I could see it doubling from here. It's hard for me to see tripling. I don't know. How do you get? I can't. It's hard for me to get to $25-$30. It used to. Oh, it pays a dividend. They're still paying the dividend past 12 months. Wow. Did they cut it? Did they cut the dividend? I don't care. I'm curious though, right? Surely they cut the dividend. I don't know. $15, $12. Revenue's declining, you know what I mean? But that's okay. Of course, excuse me. Of course they're gonna decline. What am I seeing? All right, let's take a peek. Excuse me. Like NGS, like almost like it's so super cheap, right? Oh, and let me just pull that up again. What were the margins on NGS? Look at the margins on NGS too. That's why it remind like something that stuck out to me, and I forgot when we were looking at it. Check out these net margins. That is sick. In the energy industry, 10% plus. These are 3-year averages, but still, let me pull. I remember thinking, what the hell? That's dope. Even more reason to add. You know what I mean? They got a little bit of a competitive advantage there. Maybe it's not sustainable as for such a small company, but I remember thinking, like, how the hell did they pull that off? All this growth and stuff. Now, you know that DuPont ROE calculation, right? I mean, net margin is one of those, so that's at least part of the reason for their strong equity growth. Hey, look at that. I remember DuPont formula, huh? Wow, that's higher than I thought, huh? That's sick. 10-15%. And simple free cash flow margin, I mean, volatile. Operating cash flow margin, 30%. Wow. You know what I mean? 30% operating cash flow margin. You wouldn't think there's that much capex requirement for this, right? You're replacing some of your equipment, the compressors. Return on invested capital declining over time. I don't even remember how I define that. Investor income divided by invested capital. I mean, I have an idea, right? But I have like special defined terms like investor income. That's probably net income plus interest expense, the investors in the company. I mean, you know what I mean. People who have provided capital, roughly, you know what I mean. Invested capital. I probably should have I probably do have a definition. You know what invested capital is. It's just capital. That's probably the total debt and shareholders' equity and stuff. Common, and then investor. Oh, there you go. Interest expense, investor income. There we go. I have it defined. See what I mean? I haven't seen this one. Common net income plus interest expense. That's what I said. Invested capital is tangible long-term assets. So I have weird definitions for these things. You can Google invested capital. See how many ways you can calculate invested capital. You know what I mean? It's like so subjective. So I just calculated as tangible long-term assets. I took total assets minus the intangibles and minus short-term assets. Minus short-term assets. And I thought, that's in the ballpark of capital. So that's been declining over time, which you'd expect. It's always going to come down to the cost of capital for the company. Boy, that's a pretty clean decline, huh? That's pretty clean. Like they're as they're growing, they're just not earning as much. You know what I mean? And revenues aren't even growing anymore. Just stabilized. But that can be a good. As long as you're still generating cash flow, you know what I mean? That's not bad. This is a buy. Should have added more to this. When should I have added more? Could have been adding this whole time under 7. Damn. Like, that's why it's good to check those fundamentals every couple months, really. You'd think after every quarterly release, but I was tracking so many companies that I forgot how good this actually looked. And because it was probably never a big daily mover, you know what I mean? It probably wasn't. It was never up 5 or 10% of the day. Look, it probably, let's look at the daily. Does it ever look like? Yeah, so, man, a couple days, but everything was up those days. This is a buy. Damn. It's a solid buy. Okay. I just got sidetracked. You know what I mean? I went back to... All right, back to B set. Back to B set. Where am I? Okay. All right, check out the margins. So the thin margins, you're going to expect these 0 to 5% on these retailers like this. Tangible book value. It's going to be hard to... Post-COVID, it's going to be hard to get back to these previous highs but these assets are kind of in demand. You know what I mean? Any other type of retailer, but home furnishings, a lot of competition out there. How big is this company? 110, kind of small, being missed by a lot of people. It's smaller than NGS. Whoa, that's the thing. You might not think it has the strength to survive, but that balance sheet's really strong. They lose $3, $2. Still positive operating cash flow, but you can see what can happen during the down years. Look at, I mean, that was a housing bubble, though. You know what I mean? And still, they didn't lose that much. Kind of. They went from $18 per share to $9 per share in 2 years. See what I mean? You can have huge, but that's I feel like that's a little bit of an extreme. Could still happen. The whole economy went bust. But I remember thinking, no, but B-set's been coming down for a while. You know what I mean? It's on its way down this whole time. Is that true? Is that $30? Yeah, 20. Like it was going boom, boom, boom. And then I was eyeing it late last year. I was, and I remember thinking, I don't even think I pulled the trigger. I remember thinking, it's just not that cheap. I remember thinking it's not that cheap, and I never pulled the trigger. But I was watching it, and then I was like, I think when it leaped up, I'm like, oh, I think that's what happened. I kind of remember this. I was like looking at September, October. I remember thinking it's just not cheap enough for me. It's just not cheap. And then it leaped up, and I'm like, damn, I messed up. Maybe it was cheap enough. And then boom, 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 boom. Right? $5 was cheap. $6 was cheap. $11? Not that cheap. What do you think? Wait, how did we get here? How did we get on B-set? Was it? It's in the portfolio, right? It's already there. Okay. That might be fine. So this is the thing. So there's like there's upside and there's downside, right? And so as I'm looking through this, it's not a safe play, but it's on the safer side as balance sheet from the balance sheet perspective, and yet still it's still a brick and mortar retailer, and but the upside, I don't see significant upside. Could be a double. So it's hard for me to. I don't know how. Why would I put a % in this when I could put a % in a bunch of this shit up above it? It's just hard for me. Like I'd even rather put an RFP. I'd rather put an RFP at the current price point that I would. I think in B set. I think so. That's what I mean. They're all trade offs, and it doesn't look compelling enough for me to pull the trigger on it. But I'm glad we pulled it up. And sorry, did it release news to? I don't even. I guess it doesn't matter that much. Who cares? Do you care? I don't care. It's probably good earnings or a good outlook. Yeah, they got clean storefronts. I've driven by their stores before. Are they higher end too? Oh, they didn't report today? What the hell? They must have reported, right? No? What the hell is it up for? I don't know. That seems like a big move for Bassett. Oh, Lazy Boy, furniture and home furnishing. Well, right. We saw Kirk up today too. Oh, what was this? June 3rd? Yeah. Courage and conviction. Yeah, I've seen stuff before. June 3rd. How much is it up? Yeah, it still look good. It's still decent at $7. This was June. So what were we thinking in June? We were thinking well, things were getting frisky in June around this time, June 3rd. A lot of stuff got bid up that next week. Yeah, 70%. Okay. But let me just check this home furnishings things. Yeah, you dig so. Like I couldn't like. So long as those home builders and so long as that stuff's taken off, this stuff you'd think it's gonna follow suit. That's what I mean. If I wanted more exposure to it, maybe I do. I've been trimming the home builders, and you see a little bit lumber prices are doing. Although when that crashes, I'm not saying it's gonna crash, but not everything goes up every single day. And usually things that go up aggressively pull back aggressively. Not, I mean, to the degree is what you can question. Q2 EPS estimates topping. Lazy Boy, Haverty, Hooker, Bassett. Oh, Hooker. I've looked at Hooker before too. Kirkland. It says Kirkland's up 4%, but it was up way more than that, wasn't it? Oh, what was home? I can't even look at home. Oh, damn. See what I mean? Oh, you know what? You know what's funny about home? I forgot I said this. I remember. I think I said this to my wife. I've talked about home. I already said it was a missed opportunity. Woe is me. Oh, what is it? 18? Oh, Cliff. What's his name? Cliff Sosen? Kaiser Sose? Is his name Kaiser Sose? Is it Cliff Sosen? I don't even know. Clifford Sosen? Clifford Sosen Kaiser Sosen. Maybe I'll start calling him. So stupid. Oh, this guy crushed it. Props. Oh, I wimped out on this one. I did. I thought they were gonna go. I thought they weren't gonna make it. I remember saying to my wife, like it was in March and April. We were talking about a lot of stuff at this time, right? I myself was looking at their website, thinking, you know what, they're probably gonna be having a ton of discounted stuff, and I'm pretty sure I told my wife they're probably going bankrupt, so we might get some super discounted stuff, like home furnishing type stuff. There's tons of stores out there too. It's hard to see how some of these have any particular competitive edge. But I was wrong about that, and I should have trusted Cliff. And the same thing with PRTY. Wow, this one's crushing it. That's sick. I was interested in this when he was first buying. I right around 5, and then it pulled back, and I was still watching it right there. And then when this happened, I thought, that's too bad. Cliff got like, damn. I don't even want to look at these anymore. Anyway, excuse me. So you see how that's performed, and then you wonder. I mean, that's performed so aggressively. So these are one of the more speculative plays on home furnishings. Same thing with Kirkland. These are all the more speculative plays, and these are already 10 baggers. Is it conceivable these are going to take out their previous highs? You know what I mean? Like, are you? When was he first buying home? Yeah, he was buying at good prices, so he probably figured 15, 20 at least. I guess he could have thought 5 bagger maybe. I looked at the numbers. The numbers don't look that compelling. Bummer. All right. Do I want to? Maybe I'll. I don't know. I'll give it some more thought. Add to BSET as relatively as lower risk play on home. On homes. It's home furnishings, right? But, okay. All right, anything else here? Well, it's 816, but we're like digging into companies and stuff. You know what I mean? Oh, Harsco? This was one of those companies I didn't know that well, but I added it in March and April when I was pouring over everything, and I'm like, oh, this looks like it'd be a good fit for the portfolio. And now I don't even know what it does. I forget what the dollar was doing because it's construction, right? I think. Let's pull it up. Oh, let's check the business. Oh, I gotta pull that business over. How many times I gotta... What's it do? Environmental solutions for industrial and specialty waste streams and innovative equipment and technology for the rail sector worldwide. What? What? On-site services of material logistics, product quality improvement, and resource recovery for. Okay, so it's a way to play commodities. So that's probably what caught my attention, right? Oh, some insider buying. You kind of know, you kind of know what's going to catch my attention. 700,000. Look at March. They had some in March too. That's what probably got it on my radar in March. And then I dug in. I go, yep, that fits the bill. Wait, what's that right now? Oh, 14. I have to pull this back. So on the chart, oh, look how low it got in 2016. Say industrial. This is what I mean. Oh, some things traded lower. Some of those industrials didn't quite get as low. Same thing with tech and all them. This doesn't look that upward. It doesn't compelling on the upside. Wait, I'll pull up the fundamentals for this one because I don't really know it off the top of my head. It's probably done its job. It's really good. You've done your duty, Harsco, of what I was trying to accomplish when I invested in you. Help me diversify, get exposure to industrial machinery, and you tripled. Job well done. I probably didn't get the full triple. You probably doubled for me. Oh, that'll come up. Okay, you know what I should do? So those are rerunning the reports because I just interrupted the list because it got added in the middle. When I checked it off, it got added to the middle of the list. But I wonder if I can have it add to the bottom of the list. That way it doesn't have to rerun the report every time. It's not a big deal. Who cares? Who cares? We're talking 5 seconds. Chill, kid. Chill. Yeah, what does it matter? Because I wouldn't be looking at that company anymore anyway. Oh, look at, and I like the size of the company too. 1 billion in revs. Negative tangible book value. Oh, purple green in the past. At least you had purple and green at some point. You know what I mean? Did they stop the dividend? Look at these numbers. Like no earnings, like messy earnings for a period there. Maybe they were cleaning up the company though. I don't know. A lot of debt though, with declining revenues. Oh, big jump in revenues this year, huh? The hell? Oh, what did we say? Rail? This is a good example of. Sorry, you can't see that. That was just me trying to pull up this Google search so I can pull up the hell they do. Like sometimes I'll just go to the front page of the website. Clean Earth? What the hell? Clean Earth, huh? Hey, nice pictures. That looks kind of sick. Wonder where that is. Nice. Harsco Rail. Okay, so the rail is just one aspect of what they do. Our company. What do you do? It's not compelling enough for me to dive in deep. This is going to be like a 2-minute. Like I don't see anything on the fundamentals that catches my eye or on the chart. I mean, I see this $6 in earnings, but that's probably just a hit. I see the cash flow here. Operating cash flow $2. Simple free cash flow. Peak was 10 years ago. This makes me wonder if there. You see, did it spin off? Was there a spin off here? Because that's a huge decline. This was the thing. A commodity bubble, if you ask me. Some people disagree. Most people agree with that, though, right? And so probably its assets were super in favor. So I wouldn't expect this necessarily to be repeatable. Even then, earnings topped out at 375. That's not that much. Did it spin out? Look at the decline though. It's over 50% down. It's not that for such a big company. It's kind of surprising. I don't see. It's not that compelling. So can you just remind me what you do? Like in more in something I understand better. I'm not too smart. I'm not a smart man. I understand some of those words. I understand those words. Okay, processing, treatment, disposal, and recycling solutions for a wide range of complex, highly recurring waste streams. Okay, they get rid of some waste. For which industries? Just general industrials, is that it? Okay. Recycling and disposal solutions. Okay, that's not a bad business. I like that. Stericycle. Oh, they purchased Stericycle this year. I know that company. How much did they pay for that? Oh, shit. Wait, they said this year. I see it as a big purchase last year. Right? Now I'm trying to look up that net acquisitions. Damn, this stuff, I really screwed it. when I was building these fundamental spreadsheets, I was cleaning up one spreadsheet, right? So I was just trying to get everything in one view, and then I was trying to resize it so that we could kind of look at this stuff together. And here I am still blocking it kind of, but and then I'm like, all right, I did it. And then I just duplicated the tab, duplicated the spreadsheets, and I'm like, I'm such an idiot. And I'm like, oh shit, I forgot to clean up this side. I forgot to scroll over, because I figured most times I'd just be focused on this. But I have to say, I've been scrolling over much more than I usually do, looking at those individual years. But usually I'm just trying to grab the trend with these 3-year averages, but whatever. Okay, so was that this column right here, the net acquisitions and divestitures? I just want to see the share dollar amount. 584 million. Wow, that's a big acquisition. What's the market cap? It's only 1 billion. That's a big acquisition. What was it, a merger of equals or something? So how does he expand clean sugar? Wow. All right. I like that business model, though. Wait, where's the other businesses? Oh. Material processing and environmental solutions to the global steel and metals industry. All right, that's really all I need to know. I mean, I don't know exactly what that... Processing materials. They're importer-exporters. You know what I mean? They're importer-exporters. Mill service and resource recovery. All right. I just need to know what drives the profits and stuff. Farsco is recognized for technical leadership. Blah blah blah. Just rails. Okay. It's like a good industrial company. You know what I mean? But I can't find the upside. Can't find it. I'm looking. I don't see it. Could be some transformational thing happen behind the scenes. That's cool. Is someone talking about it? But otherwise, I think I might sell out. You know what I mean? I see this, or then I see NGS. I think NGS, easy. Okay, who's this? Harsco company rebranding is moving forward. Next 6 months will be crucial. Ouch. February 27th. No one commented on it. So Steven Simpson. What'd he say? Okay, cleaner should make Harsco less cyclical over the long term. I could see that, right? Because it's waste. And rail still has plenty of room for improvement, but the steel business is still vital to the business. Look undervalued below 20, but the street will likely need much more confidence in a near-term bottom in steel. Yep, it looks like he got this right. He pretty much knows his shit. I don't always agree with him on certain stock picks though, bullish and bearish, both sides. One we really agreed on though was it CVGI? I forget. I think he may have written on CVGI. He actually thought fair value was higher than what I thought it was. Like he thought it was. I remember this because I've looked at CVGI multiple times, talked about it on the stream a number of times. I remember he thought CVGI looked compelling at $7 or $8. And I remember thinking, really? I don't see it at $7 or $8. And so, but in the back of my mind, I know he likes it, and he looks at a ton of companies. I don't even know this guy. I don't know. I just know that it's decent analysis. I know what I'm getting when I read it. That he's looking at important stuff. He kind of gets it. But I don't know where I was going with that. So when I see him say, all right, this looks like that might not be that compelling at this price, I think, all right, that's what I'm seeing too. So that's my quick take, if not the specifics of the valuation stuff, just the business. And it's reassuring, and I can do it. It's a quick rule of thumb for me. Thank you, Steven Simpson. I got him bookmarked here, I think. That's the thing. Where is it? I don't remember. Funds or something? Analysts? I should fill this out. That's just a couple of them. All right, but I think it's quality business, and I think the long-term returns from the deal will offset that initial cost of entry. Cool, well, that's good to know. I also have concerns that a weak sentiment for steel and steel-related stocks will weigh on those. Okay, really thinks it's tied to steel. Patient investors may want to use this pullback as an opportunity for due diligence in perhaps starting a position. Yeah, cool. That was when I was trading at what, 16? No comments on it. No one cares. No one cares. I care. I looked. Oh, he has one. There's one like. By Tom, I don't know. Okay. I'm gonna sell. That's it. How big is the position? That's the way I can raise some cash. Whatever. I think I have it in some other accounts too. I definitely like that as an industry. It's fun. So like I'm saying that now, that's clearly what I had seen at the time, even though I couldn't remember. And but now it doesn't serve the purpose I need it for. I want something more compelling at this point. Madrigal, this is a biotech. This and Viking I got in here. Those aren't consider I consider them unrelated to the rest of this. Like my typical stocks that I'm dabbling in. They're related to Nash and stuff. That industry looks compelling. They're all speculative though. These are speculative biotechs. They don't have any approved drugs or anything like that. But one I think could be compelling. Hair cap. I could start trimming this even more too. It's like a kind of a safe way. I think it's probably worth double what it is. Let me pull up those. This is good. I should probably spend a damn stream just going through all these damn companies. You know what I mean? Oh, I hate that I keep clicking around. I wish these were like different colored tabs. I wish I could change the color of the tab. They're all green to me. You know what I mean? I'm not reading the name. I'm just going boom, boom, boom. Sorry about that. Click up. Open up air cap. Oh, you know what? Let me clear these out. Make some space. Oh, what's Western Digital doing? Coming back down, circ. Air cap. Oh, I added to FPay. Here you go. And then you see it up at 0.5%. I did make that note, right? Add to FPay. I remember we looked at it. I wish I added more. That's the thing. I can't be wasting time taking too many notes. I should. Like, I remember we looked at it, and at first it looked compelling because I think the fundamentals weren't the right numbers and stuff, but then it wasn't as compelling, but the insider buying was super bullish, and that guy bought again, by the way. That's what reminded me. He bought, he bought again. It came today. Did I pull the trigger today? I think I pulled the trigger today. And I pulled it up, and I went, oh yeah, I gotta buy FPay, and then I pulled up the note and everything. That's what I mean, the note's been helpful. And I think I doubled the position. I doubled it. I think it was like 0.2. Now it's at 0.5. Another 100K. It's no joke. So I like that. Anyway, that was just the next one on the list there. I just saw that. So I'm pulling up air cap. Damn it. This one was a VR TV. What I should be doing. What am I doing? I don't know what I'm doing right now. I'm kind of just scrolling. I was looking at the movers and stuff, but now I'm kind of looking at, should I trim these? What should I do with these? Hope you don't mind. I mean, because I don't know what I'm doing right now, but now because I saw the cash was so low, and I added to Intero and Sandridge, and I wanted to add to RFP, but now I'm waiting for a pullback. I might even want to add. The thing about CNR, I'm trying to think off the top of my head, my top positions. I'd like those insiders to buy right now. Why don't those insiders buy? You know what? Because the insiders are smart. They've been doing a great job buying at discount prices. They never bought above. Well, I wasn't really watching it that closely back here. Whoa, 700K. Yeah, James Metcalf. Like, they only buy 7 and below. It seems they're doing a real good job about that. But now that it's 7, they're not buying it. But I tell you what, if they pulled the trigger, I'd buy more. But it's speculative that I feel kind of comfortable with this, but I also think it could be like a 4-bagger, and it's a play on residential real estate. I kind of like it for that reason. Anyway, this is my thing. I'm like trying to think about getting this cash up. All right, so I just pulled up AirCat, I think. AirCat. X out of some of these things. Did I say sell? Yeah, sell HAC. I'm not doing anything with silver or gold yet. I'm just going to wait it out. BZH, I'll keep that up there. That's like my one remaining. All the big ones I've trimmed. And I'm like, if this keeps running, BZH will do good. I mean, do I still have Hove? Do I still have it up there? I got it in some other. That's the thing. So there's Roaring Kitty portfolio, right? But I have some of these in some other accounts. And some of them have been huge winners because there were fewer positions and more evenly diversified across all of them. And I had things like HOV and Penn National Gaming. And in Camping World, they were like bigger positions, bigger percentages of those portfolios with those accounts, and they were up like they were legit like 10-baggers or 6-baggers, 7-baggers, and it's kind of funny. Like I'm like, oh yeah, I forgot this was in there. But I start with HOV. I got really lucky on the timing of that one, and there's like a handful of them where I'm like, oh, I got real lucky at that timing because I legit did. For many of those, I pulled the trigger on March 23rd. Like I was sitting waiting. And most of those were in cash. Those other, Not all of them, but a handful of them, I just had them sitting, like at that point, they'd already taken a hit. Make no mistake. I wasn't sitting in cash since like January or anything like that. But at some point in March, I'm like, oh, that's it. Now we just got to wait. I wasn't trying to time the bottom or anything. I'm like, I just needed to wait. I don't know what I was waiting for. It's kind of hard to, some of the other videos I try to talk about it. But anyway, and then on March 23rd, I'm like, that was when I deployed the cash across all the accounts. And so a lot of the prices were the March 23rd price, which wasn't the low for most of my names. It wasn't the low. March 18th was the low, but it was low enough where I'm sitting on like 7 baggers, like 8 baggers, 10 baggers. I'm like, oh my, I wish I did it more for this portfolio. Home builders were big winners. I had a bunch of home builders in there, which turned out to be sick. Yeah, anyway. But why was I just talking about that? Oh, because HOV was one of them. Because I'm like, all right, that's one of my most speculative home builder, and it was up like 5, 6, I forget, 6x or something. I missed a lot too, right? You hear me talk about missed opportunities, but I got a lot of them too. But now HOV was super risky for the Roaring Kitty portfolio, so BZH is like a kind of a higher, kind of a bit of a better play. But okay, going off on tangents now. And New Home's an interesting one too. I wish they were buying though. Okay, so I should be looking at this buying right now too. By the way, I'm pulling up the fundamentals because I guess I'm trying to get my feet wet with them again. But I should be looking at this is what these damn numbers are in here for. You know what I mean? This is what I'd be sorting by. That's what I'm gonna do. Let's do that. Let's do that today. I haven't done that yet. This is really sick because I want this stuff. Like this is a really Let's start. What the hell else we gotta do today? Anything? What agenda? Who has an agenda? We got no agenda. Let me just think. We'll look at the daily movers and let's check insiders because I saw a little bit of action today. This I might not be checking the market every day, but I'm kind of just always checking this. Oh shit, FET, they got some insider buying. Oh, that guy. Oh, that's a really small amount though. Yeah, they went heavy. They went heavy in November. 2 guys, right? 3 guys. 3 guys. Oh, I thought it was 2 guys. I mean, I think this is the same firm or something like that, right? Are they all the same? They just did a bond exchange too. I bought in at 20 cents. I was like a quick triple. Super speculative. I bought in that, like, I should have been buying other stuff too, but I was watching this real close. I forgot why. And I friggin' bought in at 19 cents. It was that boom, 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 boom. But super rich. I mean, the chart looks terrible, but that insider buying was so attractive. I'm like, what the hell? I assumed like this chart, it looks like it's going bankrupt. And then that bond exchange, I think they pulled it off, so they were able to get rid of some covenants. That's not much of a buy though. That's real small. It's something though. When did he do it? Oh, it says he did it August 18th. You know who else saw something in that? Was that, what's his name? Bearish one. Look at that. What's his name? Oh, it's probably here. So you can check the comments. It's Timothy something. Timothy Stab. I don't know how to pronounce this. Stabos. He was not many people were talking about, so I was kind of surprised when I said saw someone I. Okay, this was August 19th. August said nonsense. Give it time. Everyone thought it would skyrocket after the deal got done. Yep, I was watching the deal closely, which is why it reversed and sold off instead. Sit and wait. $2 is not an overnight thing anyway, but $1 is reasonable over the next 6 months. Substantially added late last week. Oh, okay, so he was still adding. Who else was talking about this? Energy and Anal. I don't know him. I don't agree with Timothy on many stocks, but I read his analysis. I know where he's coming from some things, and he's a deep value investor. You know what I mean? If you're a deep value investor and you've done good analysis on other companies, even if I don't agree with the take or I don't invest alongside you, I will still follow your analysis and look at stuff like this. So then when there's that obscure stock that no one else is paying attention to, if you're paying attention to it, okay, all right, there's something here that a deep value investor sees, and we may both be wrong about FET, but I'm surprised why this stock is on a manipulation at heights. SEC needs to be involved. I still think it would touch. All right, I don't know. Oh, he's got a couple of them. Kind of bring me up to speed. FY adding to my position in the low 50s today to bring this back up to it. Yeah, I kind of remember him being like more bullish than I was. It's super speculative. But that insider buying was good. Can someone explain the ins and the outs of the conversion feature and the potential for a dilution? Yeah, that sounds like a question I would ask too. I'm not experts on those types of things. FYI, add him back. All right, he made his decision. Yeah, I mean that's kind of bullish for it. He's he's gotten some stuff. He's more bullish than I am on some things. But here, now I gotta pull up the fundamentals for that one. Wait a second, it's in here, right? Oh, we came up. Wait, is it even in the portfolio? Small. I actually think it used to be bigger. I had invested in this beforehand too. Not as an energy position. I had energy exposure, so I got. I mean, I got hit too by a lot of these energy positions selling off, but I had some FET too, knowing it was a risky position and that it would get crushed if anything came up. So I don't know. I may have sold out, bought back in, but it's definitely right now is below when I first purchased it. I'll tell you that much. Yeah, I think I might have been getting involved in this dollar range between $1 and $1.50. The insider buying. With the insider buying kind of caught my attention, and you see the chart. The chart looks terrible. I mean, even I wouldn't touch this. I wasn't touching it. I'm like, oh no, look at this thing. Just waiting. And then when I saw the 20 cents, I'm like, well, it's either going bankrupt, which is a strong possibility, or it could be a big winner. And now it's only at 50 cents. That's really it's not that much of a bounce. I wish the insiders would buy more. Well, I already pulled up the fundamentals. We'll take a peek, but I need to check the news on that bond exchange too. I mean, I read it at the time, but is there any update? I think they successfully completed it. All right, so he's bullish on it. That's all I need to know. All right, let's check those. Was I waiting on some fundamentals on shit? Oh, AirCap. All right, we'll pull up AirCap. I own Twitter at one point. I got a solid, not that big of a one, like 25-30% on it. I just thought I still think it looks, what is it, $8? What's it trading at? I think I bought it like, I would have bought it at, did I get it in the 30s? No, I want to say I bought it in like 35, 36. And then I like sold out because I think I found more. I think I like sold out right before this thing. So I don't know what the hell I was doing. And I just thought the fundamentals look kind of bullish. And then I think if they ever turned the spigot on, they tried to make some money off it. They probably could. And then when did it sell off? Was this news that they weren't going to do political? No, because that was later, wasn't it? I don't know. It doesn't matter. Just got my attention. All right, AirCap. Wait, how come FET didn't come up? I'll check it off later. Yeah, super leveraged. Who was it? Jeremy Raper. He was bullish on this. It was bullish on it like higher up. I couldn't see it. The leverage. It's like it looks like it's a well-run business. That's probably what he was seeing. But the leverage. Strong earnings, and that's the thing. So some of the investors, I might agree with them. Part of the reason is just because we have different styles of investing, and my style is just like a deep value, different style. And so again, this is what I mean. Like I could disagree. I mean, if I disagree with the deep value investor, that's one thing. But I may disagree with other people, and it's just because they have a different style of investing. They're trying to maybe they're just trying to get a 50%, or maybe just trying to get 50% or 100% on a solid company. In which case, this could be a perfect fit. I don't know. It's just not for me. I don't see it for me. That's all I mean. That's why in general, you got to be careful critiquing others' work because you could be playing two different games. You know what I mean? If that makes sense. So usually I'm not critiquing other people. Sometimes I can tell if analysis isn't good. Someone like Jeremy Raper, he's a terrific analyst. Probably, I mean, that's what I mean. But probably better than me. I think he knows his credit analysis shit too. But for me, the returns I'm trying to get, I couldn't see it with AirCap. But for like I know some people like I don't know about here. Other people like compounders and stuff. You want those companies that are gonna crush it over 10 years, and like I know that's like the Buffett way too. But isn't that super difficult? I feel like that's way hard. Like I would never have the conviction in my I would never have the conviction in my analysis of an industry and plenty of people do this, by the way. I'm just and they're successful, but I remember in the early days I read all the Buffett books and all that stuff, right? And compounding and blah blah blah. And I just thought, if Buffett, that's Buffett style right now, and it's hugely successful. That's the thing. Even the shit he was buying in the '90s and buying Coca-Cola, those are big companies, and they're still huge, great companies. You can clearly see there's definitely a legitimate strategy there. But I remember thinking, like, if he were younger and he didn't have as much capital, he wouldn't be doing that. Like, those aren't the companies he would buy. And so why would I be buying that stuff? Maybe I'll work up to that point, But right now, I'm going for 50 to 100%. And if you're going for 50 to 100%, I feel like it's tougher to be going compounders. Maybe people disagree. I don't know. But if you're making 50 to 100% and you're investing in compounders, I'd love to see that, because I'd be so curious about your process and your style and stuff. And it seems so tough to me. And I just think I think the alternatives are superior. My personally, I don't know. Maybe in years I'll think, now, you know what I was doing wasn't worth let's say the emotional toll it takes on some people. I feel like it takes less of a toll on me, but which could be part of the edge. But maybe I'll look back and I'll be like, nah, that wasn't really worth it. That what I had to do, or maybe looking at these spreadsheets right now is worth it. I don't know. So I keep an open mind about this stuff. I do. And so that's a long way of saying I just couldn't see it with AirCap. So I got it. Don't get me wrong. I got it. The Roaring Kitty portfolio, I would say in general, I'm taking a little bit less risk because, for example, you're not going to see any call options position. Well, you might actually. Usually, like the calls that I'm buying are outside of this Roaring Kitty portfolio. But in this itself, it's usually a little bit less risk. But at 30, AirCap was trading at like $10. I mentioned that in one of those super crazy long videos, and I saw it this day. This was the 18th, and I said, "What?" And I thought, now it's cheap, sick, and I put in the order at like $11 that day. So I didn't pull the trigger on everything, but AirCap I was not dialed into, but watching pretty closely because I was so impressed by this sell-off. I'm like, what the hell? And I put in the order, and it didn't get executed. I'm like, what? And then it closed at 15, and I was pissed at it. I was like, what the hell? Everything was down low and then up that day. And it was up the next day, boom, 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 boom. And I feel like I bought at 18 or something. And it's cheap at 8. It was cheap at 10. That's what I was waiting for. And you can wait. What I find with these levered companies is that you just wait. It's like it's not a good fit for me right now. But what do they say in London? You want to wait for it to not rain or rain, wait 10 minutes or something like that. That's how I feel with these levered companies. I'm like, oh yeah, that could be a good fit for me if it takes it on the chin and then it sells off. So this was a great opportunity to buy it, because if it is indeed such a well-run company, then at $15 it's a no-brainer. But even still, it's only a double from there. You know what I mean? That's what I mean. It could bump back to 60. But then there's the whole risk of the industry. It's above. You saw Buffett sell out of airlines, and I guess I'm curious what Raper thinks about it. I haven't been following it that closely. I assume he's still bullish on this, right? You gotta be. But what about the long term, the risks associated with this? I don't know. But boy, what's the earnings? What was that? Yeah, it trades at half a book. What's the earnings yield on there? 26%. That's not bad. That's cheap. I mean, I don't want, that's the thing, even though we're kind of a little bit out of the woods for March and April, it's not like I want to layer on all these super risky positions at this point, you know what I mean? Then you'll know what will happen is the market will come right back and it will give back all the gains. I'll look like an idiot. So that's what I mean. Like a position like AirCap is a good position because I kind of trust Raper that his analysis of this company, I doubt he would mess this up. I need to check up on his updated analysis. I should look into that. Can I do it right now? He doesn't post on. He's got his blog. I think I gotta go check that out. Oh, don't I have a Oh, he had. Oh, that was May. Avoid air cap. I had seen his analysis on GameStop, but I didn't think it was that bad. I thought it was okay. Wow. Oh, wait. Well, this looks prescient. It's flat since this article. Oh, I'd have to read this too. Okay. Oh, too bad Raper didn't comment on this. I'd get right to the point. Yeah, that was just, so I see these in January and stuff. Oh, here you go. Yeah, does he talk about Eric? Oh, here it is. Oh, he's got a new thing there. Oh yeah, doesn't he have like a pro thing now? Oh, does that mean he's not posting about these? Oh, that's a bummer. All right, maybe I'll look into this later. I was just hoping I could. Oh, Mark, catching up on again. That was May. Okay, so this is May. This might work. Anything in here to gain access? Ah, bummer. All right, I guess that's over. Too bad. Yeah, no, he's good analyst. Damn, that's a shame. All right, I guess I'm passing on Eric. What's the market cap? 4 billion. See, it's not that small either. I could read this. I'm not gonna read this now, but maybe I'll check it out later. What's the chart doing? It's kind of just bumbling around doing nothing. The debt. I don't know what to say. How are the bonds doing? I mean, it trades at a discount to book, and first of all, it's just too big. It's just too big. 4 billion. I'm not adding. I can't. That's what I mean. Am I parking cash? That's it. I need to decide if I need to raise cash, but I still want to have the exposure. Maybe I'll put an air cap. That's the thing. But the debt. It could be. It fell to $10. You know what I mean? That's crazy. But it was temporary. Paper losses, right? It was at $20 in no time, so that's not that big. I'm exaggerating. Hyperbole to scare myself out of it. All right, at least I just feel like I looked into it. I just... Oh, the numbers broke? Shit. They'll come back. I don't know. Yeah, why does it keep breaking on me? Huh? Is it such a well-run business? Return on invested capital, that don't look that great. Here, I'm just going to... Oh, look at those net margins, though. Sick. Yeah, I mean, they're leasing their planes, right? Oh, 20%? We talk about 10%. 20%? Oh, all right, this is a good business. So, yeah, return on invested capital might be declining, but it's going to happen as you grow. Revenue's still growing. As I recall, first of all, I'm pretty sure I would just trust Draper blindly on the quality of the management team and in the history of the business, because as I recall, he was definitely more dialed into it than I am. But I'm just trying to see what he was seeing, and I see the strong, solid equity growth. That's terrific. You know who also I think owned this was Greenlight Capital. I think they were the ones who put it on my radar first. Back, it leaped up. It was like, wasn't there like an acquisition or a merger or something? It like leaped up one day and it never looked back. Here, I remember this day. I remember that. Wow, geez, that was December 2013. Like overnight, it went from 20, and then it was at 40, and that was it. And I never looked back. I feel like it was a merger or something, and then it came back down 2016. Did I own it? I may have bought it. I may have bought it around there because I had been following it because this part of these were my earlier years. But it never got that cheap, and then you got it down to 10. That's crazy. But the chart kind of is indicating a solid growth, but some pullbacks at times. But that's going to be the nature of that type of a business. Net margins though, 20%? No shit. That's no joke. That's no joke. 23%? Wait a second. How come I only have through 2019? What the hell is that? This is oh, is it? No, it's not a U.S. company, is it? Damn. Is it Ireland? Is it Ireland? Oh, it's Ireland, isn't it? Shit. I'm kind of missing these 6 months. Damn. All right. Oh shit! So book value could be lower, couldn't it? Damn it. What do we got for now? Let me just calculate book real quick. What do we got? Equity. Jesus, what is this? This is billions? Wow, big company, huh? That's what I mean. So I'll be dealing in like this sweet spot of market caps, right? Say from like 100 to 300 million or something like that. And then when I go lower, I get thrown off. When I go higher, I get thrown off. I'm like, wait a second, what the hell is this? And this is a bit bigger than I'm usually dealing in. All right, so wait, equity's holding up pretty well. I can see it right there. They didn't have to do any write downs or anything like that, or are they coming? I don't know. Buffett selling his airlines. Boy, that weighs on me, huh? I mean, and just the sheer risk of it. I feel like there's a lot of investors out there who are kind of blindsided by that. First of all, it's not like I thought through this. I didn't think through this. All I did was like these airlines and these airline related companies. It's just the level of debt. I didn't think through that something could happen to the airlines and that they would go fall. Use of the airlines would fall from like 90% to 0%. I never thought like that. Who thought that was actually going to happen? I didn't think that. But when I see a super leveraged company, and these are all super leveraged companies, even AirCap, well run though. I mean, if you're going to deal in one, you want one that's well run. But when you have that much leverage, if things you get a hiccup or something, look out. Forget about it. You can buy them way cheaper. And you saw it in airlines, and it just so happened it was like the pandemic that caused it. But I would just never feel super comfortable with those plays. And there were so many people. And of course, Buffett was buying the airlines too, so that was helping the narrative. But I could never see it. Maybe people made lots of money on the upside too. You know what I mean? I tell you, the trade for airlines. I'm on an airlines kick right now. The trade for airlines was 2013, 2014, because it was a hedge against oil prices. And as oil is the cost, that's an input for the airlines, right? As those decline, as oil prices dropped. Let's pull up a chart. I mean, I've looked at this before, so we're going to see that they crushed it. I mean, a lot of value crushed it right there. But look at this. It went from $7 to $40. And if we look at the price of... Watch this chart. I can probably overlay them. Not quite... Well, they went up. Let's say we're riding the value train, so it didn't go up quite as strongly. Oh, that's because this is throwing it off. Damn. What if I do an ETF? Well, you get the idea. This recent thing has really thrown off these charts quite a bit. But that was the time. That was the trade. That was the trade from those recession like bearish lows to here. That's it. There was nothing here, nothing I could see. Again, style. Everyone has their own style. I'm not criticizing anyone who's doing that. But for me personally, my style in this particular case helped me because all that leverage I just couldn't. Didn't touch anything. I own nothing in that front. And in this case, it helped me. I guess I got lucky, but I just feel like that's a good rule of thumb. If you're dealing with something leveraged, you better be prepared for it to crush. Or people have stop losses too. I'm not saying like people got crushed by this. I'm just saying it appears as though the upside was much more limited than people realized, even more than I realized. And now with AirCap at $30, I think I don't know. Things could have changed, and I'm not really sure. I'm not smart enough to know, but it looks cheap. I mean, it definitely deserves to be in the portfolio. Based on those numbers alone. 20% now margins too. That's sick. I mean, they're not going away. Airplanes, people. That's how we travel. But it's just not cheap enough for me. Also, there was an airline. This is there was an airline that I was interested in. It was Hawaiian Airlines. It turned out to be a 10-bagger. You always remember these 10-baggers. It went from 5 to 50. I did not capture a full 10-bagger. I honestly forget. I forget if I actually pulled the trigger on it. I remember. Yeah, I don't remember. But I was dialed into it. It looked cheap it was trading at like a low price to book. That's all. And this was my early years, right? I didn't really know much. I probably still don't. The me in the future gonna look be like, what the hell are you talking about? But it turned out to be a 10-bagger and it crushed it. But all value was crushing around this time. Anyway, oil prices came down. These went up. That was the trade. They weren't compounders, though. And now AirCap, I'm not so sure. But I'm okay with it in the portfolio. Forum? I don't know. I pulled up those fundamentals, right? What are we waiting on? Didn't I? Oh, I didn't? No, because it's more about the story. It's more about that bond exchange. Oh, I could have just right-clicked and searched that, I think. Okay, what'd they say here? This I'll check. I didn't read this. They're earning... I'm sure it was bad. I'm sure it was a bad revenue of 113, net loss, cash flow of operations. Okay, negative cash flow, but not as much as you may have thought. 6 million total cash burn. Decrease of 69 million. Adjusted EBITDA. I need to hear the quote. Okay, Chris Gill, by the way, he's chairman and CEO. That's why it was meaningful when he bought as much as he did, and that's why it's kind of meaningful that he bought 60K, but it's nothing. He needs to buy more. Dislocation caused by COVID, collapsed energy demand, little ongoing work for drilling and completion, right? No surprise there. In response to these challenges, our management team moved swiftly to restructure the company to weather the storm. Early in the second quarter, we completed significant structural cost reductions. Our results reflect the impact, blah, 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 on a year-over-year. I mean, they have to say this stuff. Just on a year-over-year basis, the cost reductions on an annualized basis are close to 150. Shit, that seems like a lot for this smaller company. Did they really do that? All right. Poof. The market cap's like 60? 55, yeah. Something like this could be a 10-bagger, you know what I mean? That's what I thought at 20 cents. But even from here, it could still be a 10-bagger. It could also go bankrupt. I tell you, the chart says it's going to go back. A longer-term chart says bankruptcy. But that's the thing. You need to look for a management team that's trying. You know what I mean? Sometimes you'll see they're not. You see some companies are just like not trying. Sometimes you try and you still fail. But like when they're doing the bond exchange, when they're trying to cut costs. I mean, a lot of them just say that, but that's why the insider buying is important, because it's kind of like you're making a statement. And you see this with Camping World, right? What's his name there? Keeps on buying the shares. Like he's like making a statement. He's like, I'm still buying this. And so you want a management team who cares. And it's kind of unusual to see such a speculative energy play like this, where the management is trying to do something. Another one is IO, which is LaPierre or whatever his name is. He kind of looks like he's trying to do something there. That's in the portfolio, but small. But all these could be like 10-baggers if they work out. And then if oil prices re-rate higher, like for whatever reason, I'm just saying, these are going to keep running. I mean, if some people are forecasting higher oil prices next year, it could happen. I don't really know. It could also come back down. So much uncertainty in this industry now. It always has been, but even more so now. All right, swift and significant action allowed Forum to significantly lower, blah, blah, blah. This week, Forum successfully closed the exchange offer The transaction extends our maturity to 2025 and maintains our current cash interest costs. What? Wow, how'd they do that? In addition, new notes preserve equity value for our current shareholders and provide a deleveraging opportunity through a partial mandatory conversion to equity at a significant premium to the current stock price. Forum now. See, that's the way to do it. I didn't look at the fine details of Antero, but didn't we see that it wasn't? I think it was like $4 or something. Wow. Okay. So those are the two things. So two things are they're maintaining the cash interest costs, and they extended the maturity. Three things: extended the maturity. Somehow they're maintaining the cash interest costs. How could you possibly do that? Whatever debt, whenever you issued it in the past, you would have thought certainly would have been higher right now. GameStop just did this too. They had 10%, didn't they? Cash interest cost. Why? Is it because they gave a kicker, a convertible kicker? And that's probably how. The convertibles, right? I mean, mandatory conversion. They're convertibles. So they said, all right, we'll have this convertible kick to it, but we want a lower interest rate, right? Trade-offs. But it's at a much higher price to the current stock price. I'm going to have to look this up. Is this a buy? Is this a super speculative buy? I have so much energy exposure. I'll have to... The expiration of results of the previously... Can you see that okay? That's better. Accordingly, the minimum participation condition of yeah, they needed 95%, and they pulled it off. Aggregate principal amount of 96%. Wow, so they did this. They did this in June, didn't they? And the first numbers they released, they weren't close. Yeah, no, it was even earlier than that, wasn't it? This all happened in July. Oh, management changes. Man, I could have sworn it was early. Oh, I guess it. Yeah, no, there it is. Oh, was there a new? What's going on here? Is there something different? Wait a second. It's the May one that I remember. What the hell? There was a Dutch auction for its 6.25 senior notes due 2021. Okay. The offer expired. As the expiration date, 15% were validly tendered, not valid withdrawn. Pursuant to this, the company has accepted payment. Okay, so so I remember this one because that would have been big because they were going to they were buying back at a huge. Look at this. So they were trying to buy back. How much was it? I can't remember how much it was. What's the total? I forget what the total. They were trying to buy back by a shit ton of debt, right? But they were trying to buy it back at a discount, like a huge discount. And I'm like, can they pull this off? Where's the 2021? Right there? This must have been it. Oh, is this it? Maybe that's it. Look at it, rated D or something. Look at it. Oh. Is it the real price? Look at this. Yeah. Whoa. Whoa, that bond action. What the hell? See what I mean? Okay, it just went up. Okay, so this latest news is really bullish on for the debt holders. Look at that. I mean, is that what they just? Oh, sorry, I wanted to see the dollar amount. How much was this? 400. Original offer was 400. They were buying back 80 million worth, but at like a super discounted price. I'm like, that's a huge value add. This is how you talk about this with GameStop. They couldn't buy back at what are GameStop prices at? I mean, if you can wipe out debt at 40 cents on the dollar, I think that's what they were trying to offer. It was a Dutch auction. They were paying up to 40 cents. I'm like, this is incredible if they can pull this off. You just wipe out 60 cents on the dollar on the debt. I'm like, that's why not many people agreed to that. We got to keep going. GameStop's prices are rising. Okay, so that was this exchange was achieving combination with 100% support. Okay, so I remember this news, and I think this was the new news. Sorry, this one, and this was the end of it, right? Based on a report provided by the agent with respect to the offer for the notes was $400. Okay, and that was the end of this one. So they only got 50%. Then what the hell did they do? This is a different offer. Okay, management changes. I kind of got less dialed in. It's part of his continuing relationship. We got to look into this. I have to look into this because this is 5-bagger material. Announced that as part of its continuing cost reduction plan. Damn, we're getting sidelined here, huh? See what looking at insider buying can do to you? Damn. Change the executive team. Who is it? He's going to be the new EVP. Report to Gout. What about the people who are leaving? Announced that Pablo Mercado, the CFO is resigning. Yikes. Whatever. Okay, then what happened? Commencement of exchange offer. Where's that? This could be real bullish. You see those bond prices, huh? Those weren't joking around. Are those the same notes? Are these the same notes? They're the same notes. Oh, shit. Okay, so first they did the auction. I mean, did they need to disclose that they were going to do this? You know what I mean? I guess not. I don't know. Okay, so now they're doing a exchange just like GameStop did. We say announce the commencement offer to exchange its existing notes for new 9% convertible notes. Okay, so that's what I mean. So they say the same cash costs. The previous notes were 6.25%. These notes are 9%. That's what I mean. Like, there's no way whatever. So we'll get through. Maybe there's some nuance here that makes it possible. But there's no way you issue debt in this environment at a lower interest rate than you did whenever the hell you're interested in the past. There's just no damn way. Okay, but maybe that. But with the convertibles and stuff, right? The new notes will pay interest at the rate of 9%, blah, blah. And so such interest, 6.25 will be payable in cash, and 2.5% will be payable in cash or additional notes at the company's option. What the hell? The new notes will mature. So this is probably quite common in the bond world, but this isn't my expertise, to be totally honest. The new notes will mature 5 years from issuance as compared to the maturity on October 1st, 2021. Okay, all right. So they bumped it out 5 years, which is sick. Now this is just an exchange offer. Okay, secured by first lien on substantially all of the company's assets except for revolving credit facility, which will secure the new notes on a second lien basis. The notes will also be convertible into common stock as described in more detail below. Investors who participate in the exchange receive $1,000 principal amount of new notes for each $1,000 principal of existing notes. The tenders are submitted by 5 p.m. Yep. Holders who submit by 5, holders pro rata of a total payment of 3. Not be able to receive any cash and will only wait. Holders who tender what's going on here? Potentially the exchange will receive $1,000 in principal of new notes for each 1,000. Got it. Provided that the tenders are submitted by 5. Yeah, got it. In addition, holders who submit tenders by 5 p.m. on July 17th will receive a pro rata portion of a total payment of 3.5. What? They're literally paying cash? Is this a thing? They're saying if you tender will give you money? I haven't seen that before. Yo. What the hell? So when GameStop was doing it, and I assume this is how many people do it, is that they say if you do it by this date, we'll pay you a larger, this is somewhat similar, right? We'll pay you a larger percentage of par, or whatever it is, whatever the dollar amount. And then if you wait, then we won't pay you as much. But an outright payment of cash, is that a thing? But they're just like they're like, all right, instead of saying $3.5 million, and then if you give us money, we'll give you some of this. You know what I mean? It seems kind of odd, but for all I know, it's super common. Holders who tender after July 7th will not be eligible to receive any cash fee, and will only receive $950 of new notes. Okay, so then there's also this discount too. All right, so maybe they said, okay. So then you have to take a haircut. So that's what I mean. Okay, so the haircut's here, the $950 per 1,000, but they also get the percentage of cash. Holders who participate in the exchange will also be given their consents to eliminate certain restrictive covenants in events of default in the existing notes. GameStop too, same thing. So like this is huge because, I mean, you need a legal team to pour over the fine details of those covenants and the restrictive covenants and events of default and stuff, because you need the indenture and stuff. And for an individual investor, it gets difficult to track all these things, but a good rule of thumb is that management has their finger on the pulse of stuff they need to get off the books, like GameStop. I'm like, they know what covenants they need to get rid of to accomplish their goals. And so does this team as well. And so whenever you see this, if you see that they successfully got rid of certain covenants, that's bullish. Some things that matter too, but that's bullish. Exchange offer will expire. The exchange offer is conditioned on minimum participation at least 95%. So I may have seen this. I remember thinking, oh, they're not going to get 95%. Although in GameStop pulled it up too. They needed 50% for theirs, and they got 52%. I'm like, holy shit, that was close. Unless the minimum condition is satisfied or waived, the company will not be obligated to consummate the exchange. Holders of approximately 217 million principal amount, or 64%. Okay, so it looks like they already spoke to people. In 66%, they already had 60%, at least verbally agreed. Said that, okay, I'll do this. Okay, so they had some insight as to who's gonna agree, which I assume GameStop did as well, where they're like, all right, we talked to some folks. But the fact that they got 52% instead of just about 50%, I assume that they had spoken to some people, and probably the investors who own the debt too. But like, they may have executed that very well. I'm not sure. But in this case, this was smart, right? You got to talk to the bondholders and be like, this is what we're going to do. You're going to agree to this. And they had 66% support, but they still had to get to 95%. Any existing notes that remain outstanding after closing the exchange will be effectively subordinated to the new notes. So another incentive to make the exchange. I mean, wow. You kind of bullying the bondholders a bit, aren't you? Interesting that they're. I wish I had a grip on this stuff. Covenants for the existing will be eliminated upon the receipt. Wow. A portion of the new notes equal to 150 million total principal amount. 46% of the notes will be mandatorily convertible into common stock. I assume it's at the company's discretion on a prorated basis at a conversion price of 135 to the conditions at the average daily trading price for the pre. Okay. So now we know the dollar amount. Talking 135, 150. That is quite the premium. As opposed to Antero, we just looked at Antero. This is perfect. It was like the premium was like where the stock price was trading the other day. Investors in the new notes will also have the optional conversion rights in the the new notes into more than 20% of the into more than 20 a failure to approve such receivable. Okay, wait a second. So the new notes will have an optional conversion rights in the event that the company elects to redeem the new notes in cash and at the final maturity of the note. Okay, right. So it's saying right before they convert. Okay. So that was the commencement of it, and now we kind of know that they pulled this off. Now it's its expiration results. The offer expired, and they got 96%. Wow. We're extremely pleased with the positive outcome of this transfer. Conversion of original notes into notes. Had to meaningfully deleverage the balance sheet. This exchange was in combination with the ABL lenders. They were on board with all this. Ample liquidity. Okay, if you say so, but I want to thank all our stakeholders. I'm also very pleased. Oh, this is bullish, huh? I'm glad we looked at this. That was confusing, huh? Because that May stuff. This is the thing. If you don't remain dialed in on a company, I should have been following this still closely, given what was happening. And what's the latest? Oh, this was the preliminary results. I jumped ahead. All right, so they pulled it off. And then do we have the fundamentals up? Let's see this shit. I mean, it's not going to be reflected in the numbers just yet. Don't get there. I mean, this is speculative, but okay. So now we see. Look at book value. $1.69 on book value. That's the thing with a company like this. I want to be buying at 10% of book, though 20% of book, to be honest. But you know what else caught my attention with Forum is the revenue. They had $1 billion in revenues. That's what I mean. I think this was like a super dodgy company. Just because of just because of what industry they're in and the nature of their business and stuff, not because of any accounting shenanigans or anything like that. But anyway, about like $1 billion in revenues. That's no joke. What do they still have? They still have good. What the hell is on the books? It's intangible. How is intangible? How does this company still have intangibles on the book? I gotta see this shit. What are you kidding me? How do you still got goodwill on the books? I just need to see this real quick. You never see. Is it goodwill or some other like customer lists or something? You ever see that? What the hell is this? Here we go. What do you got? Intangible assets. What is this? I'm not gonna go dig the 250 million intangible assets net. What? Oh, I don't care. Whatever. I'm gonna assume they're gonna get written down though. I'll tell you that right now. Give me a break. Intangible assets in this industry. No way. I just can't believe they haven't had to write them down so far. You know, I mean, there's been plenty of write downs this whole time, right? You see when you see a big huge drop in book value, but the operating cash flow was positive and stuff. You know that something was going on. Huge negative EBITDA though, common EPS, huge. I mean, major losses. But that bond exchange is big. That's what I mean. If they successfully completed the bond exchange, and if management cares, like if they're trying and they're like, we're gonna do this, shit, that might be enough. And then we traded a discount to book value, not as much of a discount as I would like. Because this is risky. This can't be a top 10 position or anything like that. But the upside. Look at the operating cash flow too. So here we go. Check out this operating cash flow. So we got 55 cents on the past 12 months. 50-cent share price. What? And simple free cash flow too. 50 cents. See that? I need a highlighter besides that thing. Oh, is that legit? Wow. That's what I mean. That's... Okay, this might be an ad. How big is it in the portfolio? Shit. Energy, more energy? This is what I mean. I'm calling it energy, right? But it's like a business-specific thing that's going on here. This bond exchange is like unique to this. And you saw how the bonds reacted. You know what I mean? Well, that's because they these were the ones that got exchanged, right? That's part of the reason. Did they get the new one? No, the new ones aren't there yet. No price on the new ones yet. It just happened. What do you think? All right, I guess I gotta add to this. Wow. Wow. I can't believe they pulled that off. They needed 95%. They got 96%. I mean, they were kind of... you kind of had... What are your alternatives? You know what I mean? If you're the bondholder. What was the alternative again? Did they... I mean, they... If they tender after, they were going to get a discounted haircut, and if they didn't, they were just going to be subordinated. They were going to be subordinated. You know what I mean? Is that in the original indenture that they can just release new? I guess yeah. It comes down to the quality of that original indention. You know what I mean? If it was like lower quality, not. I mean, this isn't the right phrasing, but if you get some outs, if you're the management team, you can just body the bondholders into the exchange, into an exchange where you just get rid of the covenants too. It's kind of surprising to me, but I don't know enough about it. I should. With more time, I'd like to know more about it. But I don't know. So far, the rules of thumb have been helpful for me. Like even though I have not poured over the indentures here or the nuances and all that stuff, I still get the gist of like, this is bullish and this is a good thing. And I feel like many times that's all you need for some of these things. You know what I mean? Look how simple. This is kind of silly. This is the extent of the analysis. And then I guess the only other thing that I do is pull up that balance sheet. And I didn't X out of that, did I? Let's just take a peek at this balance sheet and let's see what we're dealing with here. Forget the intangibles. That's ridiculous. 100 million in cash. That's legitimate. I mean, the market cap's 60 million, but it has debt, right? So this debt's not going to be reflect the bond exchange and stuff, but that's okay. Okay, accounts receivables, inventories, and what's their inventories? This is their equipment and services, so those could be a haircut. Who knows? Prepaid expenses, accrued revenue, as long as it's a going concern, 629. Okay, maybe. I mean, this is a case where we didn't do this with GameStop because it's not going bankrupt. I mean, some people are saying that. I don't know what they're thinking, but in this case, you probably do want to use fire sale prices just in case, protect your downside. Okay, and then you got the operating lease assets. So you got 630 in assets, but let's just call it. Well, for the sake of what's on the balance sheet, we'll call it 600. We'll call it 600. Give me 100 for the fixed assets. Forget the leases. Deferred financing costs. Forget the financing costs. Other long-term assets. Give me 10. 710. And what's your current portion? This is all changed now. Minus 70. Minus 70. Minus 4. Minus 3. I could have just done current liabilities, but I was just deferred income taxes. Skip. Forget the leases. Minus 20. Okay. Wow. How many shares are outstanding? 111. And minus 412. Yeah, I mean, they got 150 on the books or something like that. What do you say? It might be closer to 1 if you're trying to be really. I don't know. Okay. I think I'm just gonna say add to it, and then we got to kind of follow the story, follow the energy. It's just gonna track energy. I mean, we do this analysis, right? It's just gonna whatever the hell oil prices do. You know what I mean? Just know what's gonna drive it, and if the industry bounces back, this is a 5-bagger. I wish I could tell you that you need a lot more analysis to get to that, but really it's as simple as that. As long as the story's unfolding and as long as the story's not falling apart in this type of industry, and fundamental events are unfolding positively, then it's just a matter of like get the exposure to energy, and then if it turns around, it could rise. But it's just so speculative. It's hard to, even if we spend more time, we could spend 2, 3, 4 hours looking at this, and it's really hard to get much significantly more conviction in this, just because you see how volatile the business model is. But the operating cash flow, I really like this positive operating cash flow, positive simple free cash flow, even in this environment. What the hell? What the hell? Okay, just quickly, the cash flow statement. Quickly. Okay, cash flow. Right, you see this loss, but you see that bigger. That was 6 months ago, right? This is going to be a mess because it's only 6 months. You need the other 6 months. Look at how low. Look at 1.5 million in CapEx. That's no joke. What? And it was covered by asset sales. Nice job, management. Look at that. This is what has my attention. CapEx for 6 months, mind you. All that was going on. They only spent 1.6 million, and they sold assets to kind of cover that. And they only burned 200,000. That's what I mean. Management teams. It looks like they're trying. Okay, add to it. Done. Got to keep moving. Oh, we're so off script today. Look what you did. How did we come across this? We came across it because of insider buying. That's going to be the death of you. See the tangents go down. But you see what I mean? It doesn't mean looking at the daily movers, looking at insider buying, and Xerox. I never did add Xerox. Got to call icon. But then you go down these paths to follow up on stuff. So maybe he just did this just because, you know what I mean? Maybe he was just making a statement. It's so small, but still, he was almost just like, all right, let me just show you that I'm still going to buy some shares. I'll tell you what, if they bought more, if they did another huge purchase, super bullish. I'd be bullish, even more bullish. All right, did I say add? I'd add to FET. Maybe I'll get it to, I don't know. Let me sleep on it. Baby, let me sleep on. I never did buy Xerox. Okay. What do you think? I didn't even get in the. I said I was going to get in the portfolio just like CDNT. I don't have an excuse of why I didn't. I think I was just waiting. I'm not really waiting for anything. He's been buying a shit ton of it though. This might be enough to get it in the portfolio. Remember, I didn't think it was super cheap. That was the thing. That's the thing. I'm trying to raise some cash here, so. I don't just want to put it in there. I'm not looking. I don't need more exposure to. Yeah, I'm not going to add it. I know I made that note, but we'll keep moving. I think that was just about it. Oh, yeah, what's this one doing? Boy, I owned this in the past. ETM, it's communications type. The family controls this company, the Fields. But super leveraged. That chart looks like shit. I might have got a gain on it. I probably owned it and I sold out in March. I didn't like it. I didn't like the risk with everything that was going on. You know what I mean? Like, everything else looked compelling. I'm like, who the hell needs this? And that's saying something too, because 150, 200 positions or whatever the hell it was. If I cut you, I mean, I cut some of the wrong ones, right? But all right, I think that's it for this shit. Okay. And then what's his name? This guy keeps on buying every day. Look at this. He's talk about statement. Oh, who just sold? The COO. Man, that's okay. Every day. 100K, 100K, 100K. You know what I mean? He's making a statement. I like. That's why I used him as an example. Because look at this. Every day. Maybe he knew. Maybe Tamara told him she was going to sell. I wonder if. I mean, that's the COO. So maybe they're talking. She's like, "Hey, heads up, I'm going to sell." And he was just like, "All right, I'm just going to buy." I don't know. Just kind of weird. Let's see if he keeps on buying after this. Why don't you just do it in one purchase? What's up with that? I don't know. All right, I think that's it. We're caught up on that. And then if you remember this one, this is this. Do you see what some activists are doing? So Carl shows up here too for Xerox. This was a mess too because it was quarter end. But I thought I saw something. You could see this, okay, right? I thought I saw something. Oh, that was his filing. DKL. What the hell did I see? Oh, ASPS. Here you go again. Were they buying more? Did they increase? Yeah, that's bullish. The ASPS was that one that just got whacked, and I was like, oh shit, I messed that up because I held on too long. Oh, this is good. Okay, so I never sold, but I didn't add either. But should I add to this now? Now I'm wondering if I should add to it. It didn't phase them. Wait, didn't we just Dare Park? Did they actually? Let's just make sure. It's 27. I don't even know who they are though. So we gotta Google them real quick. They're not. It looks like a hedge fund. Not gonna. Well, differentiate itself from other alternative investment firms, applying fundamental credit analysis in balance with proper risk management. Hey, slow down. Focus on opportunities throughout the entire credit spectrum. All right, so credit specialists. Deep value fundamental approach. I don't know. I don't know them, but they say deep value right in there. Deep value discipline. They're on the right path. But I have no experience. That's the thing. When you track people over time, you start to in firms, you start to get a feel for whether or not they deal in good potential stocks. I have no feel for this company. This isn't enough to just see deep value. Like, oh, they know what they're doing. It's because with many of the funds that I track and stuff, I know they've had a history of success because usually maybe I've invested alongside them and I go, oh, they got in that one just like I did. Just like with Clifford Sosin on those two companies. Now I'm going to I have much more, I didn't really know him, much more respect for him now that he's pulled off those 10-baggers. So I don't know this firm either, but well, that said 24% of their portfolio, but that's because they don't have to file of what we know about them. Oh yeah, they dealt in this one too. RESI. I think that's in the portfolio too. They nailed it too. They were buying like right here. Watch this. May. I saw these May purchases. Oh, they didn't nail it. Oh, they were buying right up into earnings. Oh, they were buying in March. That's what got my attention. They were buying in March at $12. Again, I don't know these firms, but I'm just watching their behavior. You know what I mean? So they're buying a good chunk of change, millions of dollars worth. Here they are spending $2 million. It's only adding 3% to the business, so they get a sizable stake, right? And they're buying. This is what they're buying in the midst of all the craziness that's going on in March. They're buying this in ASPS. Yeah, this in ASPS. That's what they're buying. I'm like, this is what you're buying, and then it fell. It fell from those prices. Wait, what's this date? Yeah, they were buying like right here and all this way down and all this way up and then go, and then I'm like, okay, now I'll buy. And so that's when I started buying right here, right? Because it was after this huge sell-off. I'd never even heard of the company before. In fact, should we understand what they do? Do you know what they do? Let's see. I knew it was residential real REIT, but isn't there something? Quality, affordable rental homes, exceptional variety, suburban communities that have. I thought there was something else to it. It's a single family housing. I forget. I thought there was something else to it. Some other angle that was it like affordable rental homes? I don't know. Oh, so they're buying more, huh? But it didn't look. I didn't know what the upside was. I didn't think of the upside on. But ASPS looked like it could have some upside. All right, maybe I'll add to this. All right, I'll pull up the fundamentals for that one because I think I made a note. Hey, let's look at ASPS, and which one should I do this over? Yeah, that was what I was looking for when I just pulled that stuff up. I saw that. I said, oh, okay, because remember I said, all right, let's just see. And the chart looked bearish and everything. I'm like, let's just pump the brakes. Let's just see what happens. And it was going down. And then it looks like, was it this week or on Friday it popped? It came back up. So I didn't trim. I didn't add. I didn't do anything because I just thought, I mean, I assume I was on the right track with the stock, right? Unless I see some, like if you miss earnings and you fall 20%, that's not as big a deal. It's not that big a deal. It's like that can happen. So my assumption is that just I'm working under the assumption that I'm right about the stock, right? Because whatever it was that caught my attention, if I pulled the trigger on it, then there was something there. And then I'm like, all right, let me just see what happens. And then unless the press release was like super scary or something, then I'm like, all right, then I'd sell. But still, I wasn't super dialed into it. That's why I'm like, I don't know. Let's just wait. And I didn't pour over the press release, which I guess was part of my reason for dragging my feet too. But I'm telling you, dragging my feet, it helps me sometimes. It sounds silly. All right, let me just pop up ASP. Oh, no. Oh, because I wasn't supposed to type that there. I got to change this. I got to go over here to do this. This is dumb. I got to put it in this tab. This is silly. 9:30. Oh, shit. We're not going to get through wrong kid. That's okay. We're doing good analysis, right? This counts. This counts. That's it. Okay, that's it for that one. ASPS. ASPS, they're doing like it's a real estate angle actually. Marketplace for real estate and mortgage industries, like online, right? Provides property preservation and inspection services, including vendor management, marketplace transaction management, payment management. Yeah, so it's just tied to real estate and mortgage industries. I think it was founded by, remember Aquin? I think, did we talk about that? The guy who founded Aquin or something. He's like related to it, or they're like sister companies or something. Like one of them has a good chunk of the revenues of the other, and that's always a little bit of a red flag. A little bit of it's a red flag. This would never be a huge position for that reason. But if the fundamentals look compelling enough, I don't want to say I'd overlook it, but I know other people are discounting them for that reason, and I might be like, that's okay. I might be like, that's a risk I'll take, and I'll defend against it other ways. How do you defend it? That's the thing. It's like some people risk management. What would they do? They just won't even touch the stock. They'll say out of my wheelhouse. They keep moving, or they'll say, I guess that's mostly. But what I'll do is I'm like, I'll take the position, and then maybe I keep it small, or I have a stop loss. You know what I mean? You can do these other things too, and in the context of the portfolio, it can make sense. Like that particular risk that there's sister companies and maybe there's some shenanigans going on there. That's a risk that's it's very specific to that company. It's uncorrelated with the other risks in the rest of the portfolio. You know what I mean? So in that sense, it kind of makes sense. It could make sense, I should say. All right, this is ASPS. What did I see in this? I see the revenues declining. Like, whoa, huh? But and then I see negative tangible book value. Shit. And I see huge. Look at this. The earnings per share negative 22 per share. But I saw the operating cash flow. Look at that. There's always something that I saw if I pulled the trigger. You know what I mean? So that's what the first thing I look for. I see revenues growing, but then now falling off. I see gross margin falling off. Ugh. Yikes. I see book value collapsing. I see positive EBITDA, though. Quite a bit of EBITDA. You know what I mean? Like, look at these historical earnings. And they've been buying back shares. Look at this. They've bought back 20% over the past couple of years. Interesting for what appears to be a levered company. Sometimes that's super risky, right? Because maybe they're being like they're being crazy, or sometimes it's a really good thing. Like Antero, I kind of view as a good thing them buying back shares. Maybe I'm gonna feel bad. I'm gonna feel like an idiot for that, but I don't know. All right, so look at this operating cash flow, $5 per share, right? Or let's even look at simple free cash flow. Although this one's gonna be weird free cash flow because of the nature of the business. I bet their cash flow statement looks a little bit weirder. It's a REIT, right? Or just real estate, whatever. So it says free cash flow like $4, simple free cash flow. Here's that definition. You can't see that. You really need. I look at that so often. I feel like I should. That's simple free cash flow. But 2 times it trades at 2 times simple free cash flow. Even if it's messed up, we'd have to look at the cash flow statement. I can't make that statement without looking at it. But you know what I mean? Like legitimate cash. Legitimate cash. Ugh, messy though. I don't know. But a long history of positive operating cash flow. Look at even this year where it's getting crushed. Positive operating cash flow. Positive operating cash flow. It's negative. Simple free cash flow dipped negative. Net cash flow 250. Wow. And EV to EBITDA. What do I got? 0.5. Wow. You know what I mean? Like it's really cheap. Like 5 is cheap. You know what I mean? That's a tenth of that. Market cap 154. That's small. All right. I like this. Why do I like this? I like this because Deer Park, that fund, I don't even know who they are. Deer Park Road. They say the expertise is this type of a thing. You know what I mean? And it's safe to assume they're interacting with the management team and getting the lowdown. Is management buying? 100K, and I missed this. Hey, how do we miss this? August 12th, 100K. From the chairman of the board, CEO. It's not that much. How much do they own? They bought 25K in November. All right, let's take a peek at this. DEF. How much do they own? If they own a good chunk, I think I'm sold. If they own a good chunk, I'm sold. Oh, that's the guy. Yeah. So he. Oh, I forgot he owned this much. This is the guy who founded Aquin, isn't he? Yeah, there you go. One of the country's largest non-bank mortgage servicers after big banks re-rated. All right, okay. This guy still owns 40%, and that's the thing. I think these companies are doing business with each other or some shit. But here's the thing. So, because I looked in, I don't remember off the top of my head. But watch this. How about this? Related party transactions. Shit. Oh, we're in the wrong one. What is this? No, we're in the wrong one. Wait a second. What does that say? Oh, I got thrown off because it wasn't the ticker of the other one, RESI. What the hell? Holy shit. The ticker was this one, RESI. And then I was looking at this one, then it says from RESI. Wait a second. Is it the same company? It's not, is it? What is RESI? It's not, is it? Ah, shit. I'm just trying to find out what that acronym is. Oh. There we go. It is. Oh, jeez. These are related companies? Oh, that was what... Here, I was thinking it was Aquin. It's these two damn companies, and Deer Park's buying both. Okay, why is... Okay. Sale the remaining the sale of 0.755 million front yard residential corporate shares for net proceeds. As a result of these, the company repaid 45 million senior terminals from the sale of financial services and Resi shares. Why did it own shares in that? Oh, does he own shares of Resi? Wow, that was it, huh? And ASP in Deer Park Road's buying both, huh? Interesting. Same dude owns all this? What the hell? Is this bullish? Some people might see this and they think that that's a red flag. I think it might be bullish. Deer Park owns 12% of this. And what do they own in the other one? %. So William Irby is kind of related to that. Okay, but him individually is not an owner. All right, so I don't even care about digging in deep. I'm supposed to, right? I'm supposed to care about. I need to get to the bottom of what's going on here. What exactly is happening, right? That's how I'm supposed to react to this. And I think, whatever. I think, all right, I get it. There's something going on here between the two. I will have to dig into that down the line at some point. I don't feel like doing it tonight. But I do want to better understand this relationship because you don't see this too often. You might see two companies with related party transactions and something going on. Who the hell is Deer Park Road getting involved with this? You know what I mean? They're stepping in. They were like, I see you own shares in this one, and I'm like, I want to own both of you. I don't see that too often, and so this is a story I'm interested in learning more about. I guess even just for educational reasons, right? But even from taking the position, you know what I mean? This is bullish, though. I think I'm gonna add to both. I think I'm more intrigued by ASPS though, because they're more services. They're providing a service to the industry, and Resi just looks more like a. All right, I'll pull up Resi, but I remember thinking I don't see much upside here. What is it? 9. This one's tough. Plus, it's tough to value. Oh, why'd this one get lost? Whatever. All right, I'm gonna add to both. If Deer Park, good thing Deer Park Road bought. See what I mean? If Deer Park Road didn't buy, I wouldn't be doing this. They're kind of making a statement too. They already have a huge position. This is only a 3% increase. How many shares? 3.7. They've only been building. And that's the thing. So there's this risk, right? Of these Deer Park. Whatever the risk is, Deer Park is well aware what that shit is. And if they're just a straight up fund and kind of unrelated to the businesses, they're taking on the risk and they don't give a shit. They go, yeah, it's not as big as the market's pricing in. Without them buying in it, and I saw owning each other's shares and stuff like that, I'd be like, I don't know. Could be some funny business going on here. There still could be, right? I'm not saying it's not happening, but I just think it's a vote of confidence for this fund. Even more so if I was familiar with their style. That's okay. I just don't. Oh shit! Everything broke. No. Uh-oh. All right, so there's ASPS, and where's let's check out Resi real quick. So what stands out to me, what I do need to just check out, if I could just check out the just the cash flow statement real quick. Let's look up last year. Last year, just real quick, just so I can get a sense of what the hell a cash flow statement looks like for this type of a business. Losses, right? Okay, depreciation, amortization, blah blah. Goodwill write-off. Yeah, okay. Ooh. This looks big. Share-based compensation, 11 million. What's operating cash flow? Wow, that's big. See this? 11 million. 12 million? 12 million. And 10 million. So that's being added back to the cash flow statement, right? To the operating cash flow, but like that's a legitimate expense. You read about that in those. You read about that when you're doing cash flow analysis, right? Like, and you see some tax benefits, you can kind of impute what the actual expense would be. So in theory, you'd kind of reduce operating cash flow by this dollar amount. That's what the books say. You know what? I don't care. Accounts receivable, then the working capital. So we'll just average this out. Okay, so I'm seeing 66, 68, 40. Everything else looks fine. Just the usual stuff. Working capital management all down here. Short-term investments in real estate. They're all kind of flowing. So I'd say 50 million. Let's call it 50. Okay, so this is the thing. So only this is counted as additions to... Only 2 million? Holy shit. That's legit. This is like what we just saw with Forum, where they only had like 1.5 million in CapEx or something like... They only have 2 million in CapEx? And they're generating 40, 50, 60 million in operating cash flow? That's low. I mean, that's low. That's a low cost to continue generating the cash flow, assuming that that's the thing. Are they under? Not in this case, but when you're looking at this, you got to separate maintenance capex and growth capex. And is maintenance capex actually adequate enough to like sustain the revenues moving forward? You know what I mean? In this case, I don't get like there's so much. This is so messy. That's besides the point. But in theory, if you were doing cash flow analysis, that's free cash flow analysis, that's what you'd have to do, and try to parse out what maintenance capex is. In this case, this is so big. That's probably what Deer Park is. I mean, Deer Park knows much more about this. Knows like 99% more than I do about this. But look at this: 4 million, 2 million. I mean, even if they're not investing enough in the business, even if it's 5 million, 10 million, we're still looking at 30 million. And weren't they buying back shares? We said. I'm all over the place. Yeah, you're still looking at $1, $2, $3 in free cash flow. What the hell? That's a low capex requirement. And proceeds from the sale business, so they're selling businesses, right? So they're generating some cash this way. Proceeds from sale of equity securities, that's probably RESI. That's how much they had? 8 million? 8 billion? No. I was going to say, that's not in thousands. Jeez. You know what I mean? I get thrown off when I'm dealing in sizes I'm not used to. Oh, I like this. I like that they're generating cash from the asset sales too. Do you know what I mean? I always like that. Debt though. Leveraged, related party stuff going on here that I still need to learn more about. All right, and let me just say, I phrased this all the wrong way. Sorry. Learn more about relationship with Resi. But I don't think I'm going to add to Resi, though, because I just don't see I mean, I'll pull it up, but oh, I pulled up the fundamentals. All right, so I'm gonna leave here. So this is what I mean. So this cash flow like looks like it might be legitimate. See what I mean? This is so big. I was like, all right, something's above my head, or it doesn't calculate cleanly in my spreadsheets because I'm so used to like materials and industrials and energy and consumer discretionary. But when I step into the finance world, it's a little bit different, and there's financial statements a little bit different. And sometimes I just need to dig in, and I'm also less confident in my analysis of those types of things. But that shit looks pretty straightforward to me. And so these multiples that we're seeing on the left hand side here too. Hold on, let me flip Philadelphia. Okay, and then on the left hand side though, you see all this green. This is legit. EV to EBITDA 0.5. Earnings yield of 80%, 125% for operating cash. This is cheap enough for me. You know what I mean? These other risks, I'll take on these risks. I'll take on these risks for these numbers. And negative tangible book, there's hair on it. Make no mistake. But right? Okay, and then for Resi, I like this too because it's you see my reluctance with like FET, right? Because I got all this energy exposure, right? Do I really need more in an added risk like that? This one at least is a little bit different. A little bit of a different type of risk. It's real estate and messy, but I don't give a shit. That's what I do. Okay. All right, let me close out some shit here. I got all this shit open. I'm glad the stream didn't slow down. That's good. I got Final Cut open too. I'll try to finish the I gotta do some editing on that. I'm interrupting myself. I only got 10 minutes left. I'll do some I'll try to finish up the editing on that GameStop video, and hopefully I can have it finished tomorrow. That's the thing. I know I know what I have to do, but once I get editing into it might take me a little bit longer. So I'll do my best. But I'll see if I can get it out by tomorrow. If not by tomorrow, maybe by the end of this weekend or something. But I'm close. And then at that point, we'll just be waiting for more news on the company. What the hell else? How much can you say about a damn company? You know what I mean? But I'm using GameStop as a template for doing videos about these other companies, you know? And so when I do, let me know your thoughts on the video, because if you like that style of video, I try to pick up some video editing techniques and shit. Then I can then it's good because I've just done a lot of the work and the educating myself on Final Cut and how to do some of those things. It still takes me a long ass time, but moving forward, it should be streamlined. You just got to put in that initial growth capex, and then the maintenance capex is much less. You see what I mean? See it all, I'm connecting all the dots. You get that? All right, here's Resi. Okay, so $6 intangible book. EBITDA, $2 million. There's something else about this company. First of all, what the hell do I see on these numbers? I don't see shit. Super leveraged, but that's okay. Declining tangible book. And if you look at the chart too, I am looking at the fundamentals, but you see the chart, you see the same shit. I know I just had this up. Where's it gonna go? $15? $12? I mean, maybe it's a low risk thing. I don't know, but this isn't usually my style play. I like the ASPS. I like the ASPS risks. These ones. Is anyone talking about these? Bearish, really? Oh. I think I've seen his analysis, and I don't know. Excuse me, I don't know him too well. Is a single-family residential REIT? Oh, single-family residential REIT. I still thought this. So it's single-family homes and stuff. Okay, so I can check that out. Oh, here we go. Yeah, and so more recently, Trendier decided to end its existing asset management agreement with LT Source Asset Management. Pay a total $46 million to break the deal. All right, so I'll have to. So he touches on this. That's good. That's good. So I can read more about that. Let me flip back, and then we just see if there's stuff on AIPS. I can check this later. Oh, I'm gonna run low on time. At least I finished with these two companies, and we found a couple of good things today. We found a bunch of things today in the portfolio. You know, who needs to screen when you get this many stocks in the damn portfolio? It's all right there. Right? We don't even have time to get to other stuff. Anything here? Nah, I don't see anything here. All right, but I got to read that other guys. I like reading the bearish articles because then there could be some good counter arguments. Maybe they're going to... Yeah, I'll have to check that out. Oh, yeah, I'll say that. Nothing on ASPS, though. Obviously, that's the one I'm more curious about. Okay. Okay. Now, where were we? That was okay. We got through inside about. How about daily movers? We got time for daily movers? So we didn't get through the Roaring Kitty portfolio, but we made good progress on a good number of companies, I have to say. Oh shit! Is this the one that I missed? Don't show me this chart. No, that's okay. I didn't miss shit. Momenta, Innodata. Isn't Momenta that huge? Are they related to like some COVID drugs or something? Innodata. Well, I've owned Innodata before. Oh, 46%. It's done nothing though. Nah, I don't. Not a missed opportunity. I was getting involved right, like a buck or something. That's a long double. That's not for the risk that you were taking on too. Not worth it. Hudson, CBL, Resolute, RFP, Cirque, Tailored. Forget about what is this? It's bankrupt. 20%. Come on. Kirkland's missed opportunity. Don't get me started. Silverball. Okay, so Silverball, is this up because of natural gas? I think this is like an interesting natural gas play, by the way. That could be a way to play it too. I wish that was super spec. Look, this looks like a mess. But could check that out later. It's on the portfolio. I get so much risk on that. I don't know if it's a risk I want, really. I get so much other. We got talking about NGS. We're gonna add to that. Did I say B set? Add to B set as lower risk play on holes, potentially. I'm still not totally sold on that. Target. Wow, that's a big move for Target. Beasley. Pam Beasley. Radio stations. Interesting. Levered. I wish the insiders were buying. Oh, it's in the portfolio. Is it still there? Oh, you know what? I think it's one of the smallest non-nominal positions. Like, I looked at it recently because I was looking through the smallest position. I'm like, should I just sell this? And I'm like, nah, just keep it. I don't know that I'm going to add to it. I would need to see something. I would need to see something. It's like radio stations, you know? Or someone taking a stake or something. At home, don't get me started. YRCW. I'm less... it's okay that I missed this one. I still should have had it, though. It should have been in the portfolio. The trucking. Remember I talked about trucking? Like, why did I not have more trucking in the portfolio? I don't understand that. This was one of the most speculative ones I would have added. But it would have been like third or it would have been like fourth on the list. There was like three other ones. I had trucking going into the crisis too. Maybe a couple of them got stop lossed out, and then I just lost track because of so many damn positions. But YRCW, that was one that it would have been my speculative trucking play. I always just kind of like the chart. The chart always looked interesting to me. At $1 to $2, I like the chart. Hey, we got through the daily, so not many movers today. That helped. Tuesday. Oh yeah, this company's bankrupt. This looks like it could be the time to get it was at 12. So this was the time, right there. It could be like a 5-bagger from those. Could be worth $1. Check out the Seeking Alpha. What's his name? Blum. He talked about that. Looks interesting. Looks like the balance sheet looks surprisingly strong for a bankrupt company. I'd have to check the update on that. In fact, let me do that just quickly right now. What is this? Rarely would I want to dabble in a bank. It's not in the portfolio. Roaring Kitty portfolio. Yeah, boom. There you go. Rarely do I deal in bankrupt companies, but he's good at credit analysis type stuff. I respect we have somewhat similar styles, not quite the same, but I respect his analysis, especially in a play like, oh, here he is, August 19th. I agree it's an uphill battle to get an equity committee in any. I agree it's an uphill battle to get an equity committee in any bankruptcy case, but we have a better than normal case here. Did it not work out? Oh, I was hoping it worked out. Yes, the inventory drawdown was due. Oh, I don't like that. Is he trying to make a equity committee? No, I'm done. No, I'm not doing no equity committee. Nope. I thought they would be able to avoid that. It looked like a surprisingly strong balance sheet for a company in bankruptcy. All right, 4 minutes. We got 4 minutes. Come on. What the hell do I do? I don't know what to do. Back to the portfolio? Do we have time to do anything? Look at all these tabs. I don't know. Were there any companies I didn't get to? We already did the insider buying. The weekly movers. That's the thing. We kind of missed a couple days. We missed Tuesday, but I don't have time for this. Just kind of looking at the movers. This is the thing. This should be like a Friday thing. You know, like looking at the weekly movers. That should be like a Friday thing, because that's going to capture Tuesday and Thursday too. If assuming I even stick to this schedule. All right, let me just get back to the Roaring Kitty. I don't have time for this. Let me check the Roaring Kitty portfolio. Anything else that stands out? Let's look at what Michael's. Ah, damn. It should have been a bigger position. This should be Michael's should be a 1 or 1.5% right now. That one's a missed opportunity. I think I added that in the list. Oh yeah, we got this now. Sick. We said that elsewhere, but I forgot to add them into that list. Tech crushing it, sick. IPI down 6%, whatever. Until those insiders buying. IO down. So this is another one of those speculative ones, but it seems like the management team cares there, but I'm not sure. I want to see more insider buying or something. I got a position somewhere. So Fed, I can't believe we're buying that. I can't believe. Look what you made me do. Look what you made me do. Laurel. They got some satellites and shit. All right, kind of a quiet day overall. Oh yeah, there's Beasley up. I'm cutting down to the positions though. What am I down to? I'm down to 145. That's not bad. It was at like 185 when the things were started. So I'm going to try, like ADS, this is already a big winner. It's like a solid, like low risk double. I can kind of get that down. Exterran's energy position. Like I can probably get rid of some of these. So it'd be nice to raise some cash and redeploy it against some of these larger positions, right? Yeah, and we'll see. And so I'll even buy some more GameStop. You think I won't? Try me. Now it's mid-August. We're just getting real close. I might do one more. I might pull the trigger once more. I might increase it another third. I don't know. We'll see. Maybe I'll get a full night's sleep, and I'm like, no, don't do that. Maybe just because I got some beers in me, you know. But everything. I mean, most of the positions are working out right. Like reminding me that some of these have been good picks. And so the more I think about GameStop, the more I think I'm not wrong about it, and the more I think I should load up on this position. You know what I mean? So maybe I'll do one more round. I don't know. We'll see. Let's see what the feedback I get. If I can get that video tomorrow, get some feedback. If people are like, yeah, this is good, and GameStop's going to the moon. No, I don't know if it's going to the moon. Just kidding. But yeah, it still seems to be shit. We haven't had any news in a while, right? All summer, like. Are they going to wait till earnings to release all their news? They got the sale leaseback they could be doing it. Plus, I don't know. So news will be mid-September. That's when the earnings readout would be, like around September 10th or something. Maybe we'll get a bunch of a news dump then. But this is probably going to be a rough quarter. This is like the last quarter that they'll get all the shit news out. And then I feel like it's going to be all, not all roses, but all good news from here on out. So we'll see. I don't know. Anyway, so let's raise some cash. I'll make some decisions, and then we'll take it from there. But yeah, look at this. All right, so this is kind of a nice. We weren't. I feel like we're always grinding right till 10 o'clock. So, cheers. Nice day. Nice time. Hope you enjoyed. I'm glad. It's kind of nice when we do the research, right? We come across some new potential opportunities. So we'll see if I don't always pull the trigger next day or anything like that, right? You know, sometimes I'm just taking these notes, but I'll review these notes with some coffee or espresso or something, and be like, all right, yeah, let's do that, and then depend what the market's doing too. So, but all right, okay. 10 o'clock. Nice work. All right, and have a nice night. Thanks for joining. Hope you enjoyed, and I will see you on Friday. All right, peace out. Let me pull up the kitties. The sleeping kitty. We got the roaring kitty. My daughter calls them the roaring kitties, the dancing kitties, and the sleeping kitties. So let's pull up the sleeping kitties, and you have a nice night.